15 in series. We do usually 2 of these every day.
Every day. It feels like that, doesn't it?
Every year. Wow. Yeah. Amazing. So 15 edition in Dubai and 3 edition outside of Dubai. 1 in Singapore, 1 in Vietnam, and 1 in London so far.
Amazing. And now you have your own microphone. See, we're both adults. We both deserve a microphone. How did this start? What happened?
Well, thanks for ruining my opening remarks.
Okay, come on, sorry.
All right, fine. To talk about this in my opening remarks.
Everyone, give a big round of applause to Hadi. Otherwise known as the husband of Rim. And my name is Gordon Einstein, and I'd just like to, introduce a little bit of chaos in the morning.
Sure. Yes.
You awake now?
Great, yes.
Feel powerful?
Yes,
okay,
yes.
Everyone, full attention to Hadi.
Thank you, Gordon, thank you. Good morning, everyone, ladies and gentlemen. I would like to welcome everybody to the 15th edition of the Global Blockchain Congress. We are super excited about this. I want to extend a special thanks to all of our sponsors, and I want to specifically mention Teal, our title sponsor, and Liquid Loans, our strategic partner. Thank you for your support. Without our sponsors, these events can never take place. So thank you again. Now, as we were just talking about the Global Blockchain Congress, this is the 15th edition. 15th edition in Dubai and 3 international editions. It's a big milestone for Agora. It's a big milestone for the Global Blockchain Congress. As we host this edition, I look back at how this whole thing started. Our first Global Blockchain Congress kicked off in September 2018, about 7 years ago. And I remember the ecosystem in Dubai back then. We were trying to get somebody from the government to come and speak at the event, to talk about regulation, to talk about framework. And we couldn't find anybody. We tried talking to the central bank, to the security and monetary authority, to the various different financial centers like the IFC, for example, DMCC, and nobody had anything to say about crypto because it was still a very new technology and they didn't really understand how it's going to unfold. Now, fast forward 7 years, and the UAE has truly become an international hub for the crypto industry. This is a testament of the leadership of this country, the vision of this country, and how they went in such a short period of time from basically an observer of a new technology and a brand new financial system to being the leader behind that innovation. And now the UAE is really home for some of the biggest innovators and the biggest investors in this ecosystem. Now, when we first started, the way that companies raised funds in this ecosystem was also different. At the beginning, everybody was using ICOs, initial coin offering. And back then, it was the Wild West. It was a very new idea, a very innovative idea of raising funds. But it was also chaotic, unregulated, and a little bit dangerous. And then after that, we evolved into STOs, if you guys remember, with security token offerings, and there was a big debate each time a token would come out, if it is a utility token or if it's a security token. And then came IEOs, and then followed by IDOs. So all the O's that you can think of with different iteration of the initial idea of ICOs, and how can we create a new way of raising funds that is different from the traditional financial system. Right now, in 2025, the landscape couldn't be any different than that. This year, and I think in the foreseeable future, raising funds in the blockchain and Web3 space is no longer about speed, it's about sustainability. It's about aligning with the right investors who bring not only capital, but also credibility, compliance, and long-term partnership. These are the signs of a maturing market that is now part of mainstream economy. Today, successful projects don't just look for money, they look for mentorship, market access, and meaningful ecosystem. raising a fund right now, it's all about utility, responsible governance, and the path to scalability. And this is where Agora Group has played and continues to play a unique role. The Global Blockchain Conference is not a conference, or it's not only a conference. It is a global investment platform, a bridge between visionaries and investors, between innovation and implementation. Over 15 editions, we've hosted hundreds of blockchain projects from all over the world, and we've connected them with thousands of investors, VCs, private equity firms, hedge funds, and family offices. And together, they've raised hundreds of millions of dollars of funding. But beyond the numbers, what truly defined us is our commitment to quality. Every meeting at this Congress is curated, pre-scheduled, and designed to create real value and real opportunities. Every partnership we help form has the potential to change the trajectory of an idea, a startup, or even an entire market. So whether you are a startup meeting your next strategic investor, or an investor looking for the next breakout innovation, or an institution exploring blockchain adoption, the Global Blockchain Congress is your perfect partner. Because in a world that is constantly evolving, we remain committed to one thing, which is connecting vision with value. As we open the 15th Global Blockchain Congress, let's remember, innovation doesn't happen in isolation. It happens when great ideas meet the right capital, when vision meets execution, and when trust meets opportunity. Let's make these 2 days not just about discussions, but about deals, direction, and disruption. Welcome again to the 15th Global Blockchain Congress, and welcome to the future of blockchain investment. Thank you.
I'm going to just back up my friend there. I've been emceeing this for 4 or 5 years now. I do it just because I love it. You know, I think, you know, that this is a active community service for me, and it's pleasant and amazing to see, you know, Dubai is not lacking for conferences, especially this week. This is not a place where you have to go hunting for a conference. There's always a conference, there's always a gathering, and they range in all kinds of quality. But I love your model of consistency, I love your model of quality, I love your vetting process, and I've seen it in action over years. It's not just talk, you really follow through. So I'm happy to support and be part of it, and I think everyone should appreciate what's in the room. Everyone in this room is selected and chosen carefully and through a process, so, you know, look around, there's good people. Look at your people at your table. Who hasn't said hello to everyone at their table? Sir, have you? Yes. You sure? Yeah. Okay, he's great. Be like him. Okay? Good job. Darn it, you really rose to the occasion there. That was good. Okay, so our first panel, I'm 56, so I need glasses. So our first panel is Web3 in the UAE, building the world's most forward-thinking blockchain ecosystem. So our moderator, Kat Miroshkinova, partner UniVC. Kat, are you here? Kat, please. Of course you're here. You're at my table. How can I miss you? Okay, very good. You'll introduce your co-panelists, but please come on the stage. Big round of applause for Kat. Topic near and dear to my heart.
Hi, everyone. Great to be here. Amazing community of innovators, entrepreneurs, investors. Glad to be here. So I would like to invite our first panel. So I would like to invite Jimmy. Jimmy, you here? Jimmy is the CBD of iHopen. And I have here Nabil Arnaus from the Innovation City. Please. And I would like to welcome Zahir Al-Orm from GMCC. Thank you. Okay, I'll try. Amazing, guys. Thank you so much for joining. And I hope everyone having a good day. So I would like to start with quick introductions. Please, if we start with Zahir. Zahir, why are you here? What do you do? Can you share more about DMCC? Thank you.
Absolutely. Good morning, everyone. It's such a pleasure to be here at one of my favorite conferences, investment platforms, so thank you so much for having me. My name is Zahir. I lead the Crypto Center at DMCC. We are a Government of Dubai authority offering licenses, registrations. We operate an area called JLT, Jumeirah Lake Towers, just behind Marina. And we excel at building ecosystems in the commodities space as well as the tech space. And at the Crypto Center specifically, we are a complete Web3 hub, offering networking opportunities, access to capital, to talent, and I'm going to tell you a lot more during the panel. Thank you.
Thank you so much. I think we're going to have a lot of juicy insights today. I'm very excited about it. And Nabil, please, can you kindly introduce yourself?
Thank you. This is Nabil Arnous from Innovation City. We used to call ourselves RAG Digital Assets Oasis earlier. We just rebranded a couple of weeks ago. We are a free zone authority, just like my peer over here, focusing on licensing and the regulatory framework of all the innovative ideas that's happening nowadays. What we are specialized in is only 5 verticals, which is AI, robotics, health tech, and gaming, and of course Web3, since it's in our DNA. We will be speaking more about it soon.
Amazing, and congrats on the new pivot. I think that's exciting, especially in the UAE new trends. And Jimmy, would you like to introduce yourself, please? Thank you.
Sure. Jimmy Ibrahim here, angel investor and entrepreneur. I've had the chance to work with both these fine gentlemen here, having registered businesses in DMCC and in formerly RACDAO, now Innovation City. And yeah, super happy to deep dive into this conversation. The UAE has been a breeding ground for Web3 businesses, now AI businesses, and yeah, super happy to be here and to have worked and to keep working with you know, free zones and institutions from the UAE.
Amazing, and I would like to introduce myself. I'm Kat Miroshnikova. I've been in the digital asset space since 2017. I'm a technology entrepreneur, former Olympic athlete, and I co-founded one of the tokenization infrastructure layer 1. It's called Unit Network. And right now I'm leading Unit VC. We're a venture studio where we invest, scale, and help to transform with AI, with technologies, digital assets company predominantly. And I would like to start a little bit in terms of the current trends, the current ecosystem in Dubai. So Zahir, can you share more about from your DMCC experiences? So what type of companies are moving to UAE? So what really changed in terms of the data, the metrics, for example, in 2023, and right now we are in 2025. So what are the trends? What are the transitions? Like you have so many companies registering. Give us please the insights, the actual data, please.
Yeah, absolutely. I mean, for those of you that don't know, DMCC issued the first crypto license back in 2018. It was a proprietary trading in crypto commodities. That's how we called the asset, not a crypto currency, but a crypto commodity. And since then, we've been experiencing exponential growth. So currently, we have more than 700 companies within our ecosystem. And that ecosystem is very diverse. So when we launched the Crypto Center in 2021, which is the dedicated ecosystem for blockchain and Web3, we had 20 companies on board. Right now, we've surpassed 700 companies. And we've seen a change in trend where earlier on and before regulations were here in UAE, before VARA, we had a lot of startups, a lot of businesses that are relatively new ideas, unregulated. But then that shift moved on to a lot of mature businesses coming to Dubai, and you've seen many of the big names like exchanges, Binance, Bybits of the world, but many others that are innovating in different areas. So if I would say the DMCC crypto center ecosystem is a very diverse one, 40 to 50% of our members are actually high-frequency traders, liquidity providers, market makers. 20 to 30% are protocols, technology providers, chains, consultancies, tokenization platforms, and 10 to 20% are into the Web3 gaming as well as regulated businesses. So most recently, we licensed Bitpanda, one of the biggest exchanges out of Europe, TokenVest, ControlAlt, who are innovating in the space. And I'll be talking about that more in the next minutes. But yeah, I would say it's about more mature businesses moving to Dubai. That is the change from earlier on.
Amazing. Thank you so much for so many data metrics. I think that's super important to see, especially from you guys. You're basically on the forefront of regulatory framework and then basically attracting the companies, issuing licenses and the facilitation. So it's very important for us to hear and understand more from this perspective. Nabil, so you mentioned that Innovation City has been repositioned from Ragdao. Can you share more why? And how do you see, why exactly you guys are shifting from the digital assets towards more different type of pillars like AI and gaming and other things? And in terms of the percentage, what do you see, like compared to digital assets, and then you have a new pipeline coming? Can you share more about that?
Absolutely. So when we first started, we started as RAG Digital Assets Oasis. And the aim was, one, what we want to be is the first Web3 free zone in the world. By time, we started experiencing a huge demand on every single vertical with a new technology. AI on blockchain, gaming on blockchain, health tech on blockchain, all of those stuff are integrated with Web3. Here where we said that we must expand and we must develop frameworks that they adapt the growth and align with it. So that's what exactly did. Now, being honest enough to tell you the percentage after 2 weeks of relaunching is a little bit difficult. However, I can share some insights of our pipeline. We used to have 100% focus on digital assets. Nowadays, within those 2 weeks, we are experiencing an average of 40% only specific to digital assets, and the rest is coming from all other verticals. This is exactly music to our ears, and this is exactly where we want to what we want to achieve in the next maybe 3 to 5 years until we expand more and more.
Amazing. I think the trend is here to reposition, so definitely UAE is being on the forefront for that. And Jimmy, can you share more about your experience? I know you also run a protocol, right? And how is your experiencing? Are you headquarters here? Like, how was your transition to actually position yourself as a company, as an investor in the UAE?
Of course. Now, coming from Lebanon, it was a bit of a no-brainer to go towards a country that actually is working. So that was the first aim. But then, being in the blockchain space since 2016, the idea was to go for a country that has jurisdictions that can understand the activities that we're looking to build. And it boils down to two things. Clarity and conviction. So the UAE really is building around innovation. They're building frameworks. It's not just that we're identifying it and waiting to see how things are going to learn from them. They're actually leading now. And definitely the market matured a lot, especially here. In 21, 22, as Brother Zahir just said, it was mostly about exchanges, mostly about crypto in general. But now we see infrastructure being built. We see a very big push in AI. And this is the way forward. And we're very lucky that we positioned ourselves here, really built a big foundation for most of the businesses that have been running for the last couple of years. And we see a very fruitful future, hopefully, in the UAE for us.
I think so. I'm a huge proponent of UAE personally. I think it's definitely one of the global hubs for innovation, and compared to other jurisdictions, you can do things here. There are no blockers, so I'm very happy on that. And I would like to switch a little bit more on the very, I would say, for some companies, hard topic usually is the regulations. So I would like to hear your guys' insights in terms of how's the regulatory frameworks are here currently, and then how are they changing. So as most of us are aware, we have VARA, we have IDEA-GM. So Zahir, can you share more about how do you deal with VARA? How's the VARA licensing? In terms of how you help companies to connect with VARA, like in terms of the timeline, processes, what do you see? What's the reality? Like, are they actually getting stuck in the process? What are the risks that people have in terms of the going towards the VARA regulations and VARA licensing from your perspective?
Yeah, I mean, we are very blessed to have VARA as a dedicated regulator for virtual assets in Dubai. The process itself has evolved. It's quite straightforward. There are a little bit of challenges, but it basically starts, it's a two-stage process. It starts with stage one, where companies come to to obtain a commercial license from a special economic zone or a free zone, and then they move on to stage two to get their full application with VARA. So coming back to stage one, the company name reservation is done as an initial step. Then a questionnaire is sent to the company where they submit the information on the regulatory side, so basic information on the business plan, customer journey, and so forth. And they are provided with something called ATI, Approval to Incorporate, which means that VARA is comfortable with the business and they are willing to entertain further. With that, they come back to the MCC and we issue the commercial license. So as a licensing and registration authority, that is our part. We help them with the commercial license, the office space, the visas, the ecosystem. And then this gives them a pathway to stage two. In stage two, companies would need to interact more with VARA, getting all the documentation in place, and the insurance, everything else. And with that, they will be provided with the final approval from VARA. After that, they come back to the MCC and we issue the full license. So at stage one, it's a provisional license, while at stage two, it's a full license. The whole process is from 6 to 12 months, so that's the expectation. And yeah, I mean, as for challenges, I think there are a lot of businesses that are not ready to be regulated, right? The companies need to have a full understanding on the regulatory part. So is it viable for me to be regulated or not? And at the same time, VARA has established clear guidelines on different activities that are possible. So I think having the license is just the starting point, but then after the license, the supervision part is the hardest part too. So you need to constantly report back to VARA on all the aspects, and that's where the hard work lies. It's just like launching a token. Everybody celebrates the launch, but the actual work is actually after the launch of the token.
So what do you, like, I'm going to ask you, what do you think is the percentage of companies actually getting the licenses? I think because all of us, we want to get licensed. We hear one timeline, but then in reality, we get like 2 to 3 years. I mean, of course, it depends on the company setups and how they are, but based on my conversations, what do you think, like, are there any actual blockers, or like, what are the success rates?
Yeah, I mean, a big success story would be the number of VASPs that Vara has licensed so far, right? So Vara was established in 2022, 2023, and in 2 years' time, we have more than 40 VASPs that are licensed in Dubai. If you look at Europe, if you look at other places, with all the history that they have, they don't have the same number of VASPs licensed by Vara. So I would say that's a big success metric. What was the second part of the question?
I think you
The
answered
percentage,
it.
the percentage.
I think the percentage, like, based on your overview, outlook.
Yeah, so usually to be regulated, you need to, the regulator needs to take time, right? Your business model is reviewed. They want to make sure that you are operating in a very compliant manner. So for us, for example, we have a pipeline of more than 35 companies that are going through the VARA process, and 5 of them so far have obtained the full license, with a lot in the IPA stage, which is the in-principle approval. But that gives you an idea on the percentage. I would say it just takes time for the regulator to get comfortable with different business models.
Amazing. I really hope it's going to increase, for sure, in terms of the timeline and approvals, because a lot of companies are looking ahead to regulate here and then get the licenses. So super excited. And Nabil, what about the Innovation City? How's your regulatory approach? How do you compare with Vara at the GM? Where is your stand? How is your experiences in terms of regulatory approach in this area?
We complement. We don't compare. We don't compete. We complement. The very important thing is for the client to understand what regulator means to him, and what are the regulated activities. What are the chapters that this is considered regulated and which is not. Here, where you will understand what's the value of Innovation City. And just to make it clear, VARA, ADGM, and all the regulators among this planet, they focus on maybe 4 or 5 verticals, right? Exchanges, custodians, payment service providers, maybe brokerage, stuff like that. Now, the innovation side is way bigger than that. There are many people that they build on top of the exchange. There are many people that they partner with the exchange, and they are not regulated. This is what we need to make clear to our clients. Now, our relation with Vara and with ADGM, we respect the amazing job that they are doing, but we have nothing to do with it. We have developed our framework, actually we have designed it in dialogue with ESCA, the Security Commodity Authority, and for just one purpose, to clarify which one is security and which is non-security. Anything which is non-security, we are developing frameworks around it. And I don't want to tip my hat and say things that we'll be releasing very soon, but there are very interesting projects which will see light in a couple of weeks, that they really touch the boundaries in between security and non-security, which does not require the regulated process. Now, one more thing to add on, since Zahir is here. It's very important also to understand that there is no competition or differentiation between the licensing process of the MCC or Innovation City or any other licensing authority. Instead, we are all making sure that we fully fill the regulation process, so the entire country is meeting the requirements. That's the main goal. That's why you'll find certain regulators for additional compliance process, and some that they don't step into it like ourselves.
That's exciting. So we have 3 areas, and then I guess you guys sit more in between, right? And sitting.
Let's call it the crazy side of it. People that they want to build, that they want to innovate.
Amazing. Thank you so much, Nabil. And Jimmy, I would like to understand more from your perspective. So how is your experience with the regulatory frameworks here in the UAE, from the project, from the protocol perspective, and also from the investor?
Of course, as I had mentioned in the beginning of the panel, I've had the chance to work with both gentlemen here, IOPN, the business that I've co-founded and I'm COO of, is registered in Innovation City. And we've had a great relationship. We're launching our own Layer 1 blockchain, and we're coming with a lot of very innovative verticals in the crossroad between AI and blockchain. So we've got a lot of support in that regards, very low friction. In regards with my experience with Zahir, at the time, there was no license for the activity that we wanted to do. We were an NFT marketplace, and there was no framework for that. And in comparison with other jurisdictions, like in the US or in the EU, where you're guilty until proven innocent, we were given the chance to build. We were given the runway to say, okay, keep building, keep pushing. Eventually, it will get regulated. And if you are infringing in any aspect, you can pivot or we can iron out some edges, but they let us work. And that was the most important part. Any other jurisdiction or any country would have not let you do that. So this was very important. And this is a very important aspect across the UAE, is that regulatory oversight is there without killing innovation. And that's the most important thing. And the UAE now, all of the regulators here, honestly, are doing a very good job at evolving with the market and not after the market. And this is very, very important. And they're really keeping up now with innovation, which is amazing.
Amazing. Thank you so much, Jimmy, for sharing. We are actually running out of time, so I would like to close the panel with 3 main recommendations, guys, you can provide. So Zahir, what are the main one actionable recommendation for a digital asset company that is looking forward to set up here in the UAE and also specifically with DMCC?
One specific recommendation, I would say just visit Dubai or UAE for once and you will understand the energy and the potential that is here. You have wonderful ecosystems, different jurisdictions, different entrepreneurs, and I'm conscious of time, so I'll keep it there. So just come visit UAE just for once and you will understand.
You visit once and you sold, right? Nabil, can you share more about why choosing Innovation City, and then what type of recommendation would you give to a digital asset company choosing you?
Quick and short enough. Please don't think. Don't complicate things in thinking where I should go and how I should do it. The more you think about it, the more you will fall into the regulated assumptions, and then you will not approach us. So just approach us. Let us do the job for you. Let Innovation City think for you, action for you, and help you to scale. And that's it. Thank you.
Thank you. And Jimmy, can you give actionable recommendation for a company from project perspective, choosing which jurisdiction to go to and why UAE versus other global hubs?
I'm going to build on what was just said by my peers here, is that the UAE is not just a crypto-friendly jurisdiction, it's an innovation hub. So any business that would come here would benefit not only by being regulated, but also to mix with builders and with innovators and potentially, probably, grow their business to a higher high.
Thank you so much. I think those recommendations are amazing. I think we're all hyped on the UAE and Dubai specifically. So thank you so much for amazing panelists for joining us and sharing the insights on how to set up in the UAE in terms of the regulatory and licenses and others. So I would like to please give everyone a huge applause. Thank you so much for your time, guys. Thank you.
That's what I was going to say. Give him some love.
Thank
Well
you.
done. Good job.
Thank you.
Beautiful. Nice start to the show. And I always say this, big round of applause for the furniture guys. They work hard. We love you, we appreciate you, we acknowledge you. Yeah, good, yalla. Okay, up next we have our title sponsor presentation by Peter Knez, Chairman and CEO of Teal Nature, and the topic is the Great Emergence. So let's give a big round of applause. Love, appreciation. Gentlemen, come on up. Good to see you. It's been a while. Good to see you. You're good.
Does this work? Perfect. Well, it's almost impossible to meet the level of enthusiasm that Gordon Einstein brings to the stage, but we will do our level best. My name is Christopher Keshen. I'm founder and CIO of Triton Liquid, an Abu Dhabi-based liquid asset fund, and I have the honor today to be joined by Peter Knez, a close friend and a mentor of mine for some time. Peter, if you want to just make a quick introduction.
Thanks everybody and Hadi, thank you, and the Congressional Congress, thank you all for the opportunity to speak. My background has been in financial services for, I hate to think about how long, but 30, 40 years. Most recently, I've been involved with, I'm chairman of a platform called Palm Global Technologies, and I'm CEO of a platform called Palm Promax Investments. Out of Abu Dhabi, and I'm chairman and CEO of a platform called Teal.
So Peter, as you just mentioned, you've spent decades in the financial services industry, and at some of the most important institutions in the space. My first question for you is, how do you see the current digital transformation taking place?
Well, for me, I think it's useful to think about the current digital transformation and put it in context of the broader set of transformations that are happening across multiple verticals, not the least of which is geopolitically, there's the transformation, I think it's the end of the Cold War era. And so in that context, you're seeing transformations of major institutions like the UN, like currency regimes, et cetera. But what I find useful from the point of view of blockchain, AI, and tokenization is to think of it as an access technology, in the sense that with AI, you can access any content, anywhere, in any format, and create almost any content. And so at the end of the day, it's really a content delivery mechanism. Second, I think with respect to blockchain and tokenization, it's really digital representation of anything in this room, and putting that in the context of decentralization. So when you put AI together with sort of this, and it's enabling the kind of access it's enabling, and you put that in the context of tokenization and decentralization, you're really talking about the entire transformation of the infrastructure of financial services. And the means by which people exchange things. So it's the most, in my view, it's the most comprehensive transformation of financial services in my lifetime.
Absolutely. I couldn't agree more. And so a natural corollary to that question, I think, is how does this broader context impact financial services?
Well, I think from my perspective, I think you heard a lot of people earlier around the regulation in that context. From my experience and where I've spent most of my career, I take and really approach it from an asset management point of view. And in that context, you're really seeing the emergence of new asset classes, which, if you think about, say, tokenization, at the end of the day, most of the assets in the world are privately held. You know, they dwarf the publicly traded assets. And the trouble with those assets is they're inaccessible. What tokenization does is it provides access. Access is a necessary condition for liquidity, and liquidity is a necessary condition for valuation. So what you're seeing in the context of AI and tokenization is you're seeing the emergence of asset classes that never existed before.
Yeah, so just to drill into that a bit more, within financial services, what do you see as the major threads or themes that are evolving currently?
You know, again, I take an asset management perspective. There's lots of different ways to approach the transformation, but from an asset management point of view, number one, it's really real-world assets, the emergence of real-world assets as an asset class, and providing liquidity and access that never existed before. Second, it's stable coins. I think you're seeing the emergence of essentially multi-country, sovereign-supported, gold-backed stable coins, which will transform, you know, and create digital settlement layers that never existed before, particularly in the global south. I think it's obviously it's a settlement layer. Instead of things taking 3 or 4 days, they'll take 3 or 4 seconds to settle. That's profound. And then lastly, the things that I'm certainly very involved in with respect to Teal is, for the first time, you're going to be able to tokenize and datafy nature-based assets, you know, natural ecological systems. You know, the obvious one now is carbon credits, but there's biodiversity, there's water rights, et cetera. So the last one is the emergence of nature-based assets as an asset class as well.
Absolutely, and we'll get to that in just a moment. So, Peter, just to double click on this, you mentioned real-world assets. Maybe for those unfamiliar with the term, if you could just define it and speak to what you see as the most important aspects of real-world assets.
Well, I think the most important aspects of real-world assets really is providing the democratization of access to what was excluded to essentially the wealthy through private equity companies or VC companies. So that's why I like to think about it from an access point of view. So the real assets, you know, you're seeing the emergence of a new asset class, and that through tokenization and fractionalization, you're seeing, you know, people being able to access these very valuable assets that never could access it before. And in addition, since they're going to be, you're taking assets that are off-chain in the real-world asset sense and putting them on-chain, right? And so from a digital representation, so for the first time, you're going to see much more transparency, immutable track record, and auditability. So actually, when we get there, the regulatory frameworks are going to be much more efficient.
Absolutely, and one thing I love that you've said to me previously is, you know, this level of transparency allows you to track raw materials from the ground to the government, to the people, which I thought is a perfect way to distill that message. So moving on to Palm Global and Palm Promax, you are chairman of Palm Global and CEO of Palm Promax Investments. Recently, you've made several announcements regarding the tokenization of $1.5 trillion worth of real-world assets. Can you describe the assets and the goal of the tokenization project writ large?
Yeah, sure. So let me put Palm Promax Investments in context. That was a JV born out of an agreement between Palm Promax United of Abu Dhabi and Palm Global Technologies to really launch a next-generation digital financial services company. So Palm Promax United is in the possession of a lot of very valuable assets. They're intrinsically very valuable. In conversations with Palm, we felt like those assets are also strategically very valuable in the sense that you could launch a next-generation financial services company in Abu Dhabi. And for a lot of the reasons we just heard in the previous session around it's the right regulatory framework, it's geopolitically well located, it's the new Switzerland, it has a mature and maturing regulatory framework. So the idea of Palm Promax Investments was to take these very valuable intrinsic assets and then use them strategically to create a next generation financial services platform right in Abu Dhabi and bring liquidity and access to a lot of assets. So the other thing I just would mention is I think the challenge with crypto in general right now, and from my perspective, again, as an asset manager, is the investment opportunity set is pretty limited, right? So you at Triton are investing in 20 or 30 speculative coins. So that's a very challenging investment opportunity set and very limited in terms of its ability to transform financial services. What the transformation really needs is it really needs, you know, AA or high-rated securities that are cash flow generating, that are tokenized, so that the vast majority of investors in the world can actually invest in them. That's not to say that you can't make a lot of money doing it. You know, obviously you're doing very well. So it can be a good way to revenue opportunity, but it's just not going to transform financial services or asset management.
I couldn't agree more. Yeah, just to build on that quickly, you know, I tell investors, I've been in this space for 12 years. I run a hedge fund. I tell investors about 95% of the assets in this space are worthless, right? But that 5% that do hold value, they comprise about 40% of the market cap, right? But when you introduce real world assets to this realm of digital financial composability, you unlock huge potential. So circling back to real world assets, Peter, obviously this is very near and dear to your heart. Where do you see this going over the next 3 to 5 years?
Well, I really see the emergence of a proper asset class where real world assets are properly regulated from a digital format. I mean, at the end of the day, right, financial securities are just packaged up data that trades in a regulatory framework. And so what tokenization does and blockchain does is it allows you to datafy these real world assets through digital representation and then be able to track them. So as the regulatory framework matures and tokenization, you see it accelerating right now. Real world assets is, you know, after AI is probably the hottest topic in financial services, right? So I think in 3 to 5 years, you'll see a proper asset class that's invested in by the vast majority of global investors, and you'll see digitally represented AA or higher securities.
Absolutely. And so you gave a little teaser to this earlier, but to circle back, in a speech you recently discussed sovereign support of a gold-backed stablecoin. How do you see this stablecoin developing over the next 2 to 3 years?
Well, I really see, and certainly at Palm Promax Investments, we're very involved in gold-backed, sovereign-supported stablecoins. If you think about the Global South versus the Global North, the Global North sort of said to the Global South, you know, give us your gold and here's some paper. And I think that's over. I think, you know, I'm very, very bullish the Global South, Southeast Asia, Central Asia, Africa, because I think this technology, blockchain, tokenization, et cetera, is going to really allow the emergence of a digital, multi-country, sovereign-supported stablecoins that effectively act as a digital currency. And you'll see, in my view, in the Global South in particular, you're going to see the emergence of a digital settlement layer, global digital settlement layer, particularly for trading commodities in the Global South, that will transform and sort of be an alternative to the dollar.
Absolutely. So you mentioned nature-based assets, NBAs for those in the know, not the sports franchise. Maybe if you could define this for the audience and describe how you see that fitting into the transformation of asset management and why it's important moving forward.
Well, so in some sense, the way I think about nature-based assets is it's sort of a third form of capital, right? So in this room, there's human capital, there's infrastructure capital, produced capital, if you will, there's financial capital, but there's also actually natural capital. So essentially, an ecological ecosystems, goods and services, whether that's the carbon sequestration, it's biodiversity, it's water sequestration. All those are also goods and services. They're just generated by a natural ecosystem. And so, again, because of the power of the digital representation and the power of decentralization via blockchain, you can start to digitally represent these services generated by an ecosystem. And in my view, you know, in Thiel's view, this is another new emergence of an asset class enabled by this technology. And our view is, in order to basically move the planet to a sustainable place, you got to start by valuing it. By valuing it, you got to datafy and productize its assets. And so this technology, I think, is one of the most important applications is going to be, you're going to actually value nature in a way you never did.
Absolutely, in a fully transparent format that allows you to track provenance from the ground all the way to delivery. So you mentioned Thiel. I know you're the chairman of Thiel. Maybe comment quickly on that, and just to build on nature-based assets, what's required to create a proper asset class out of MBAs?
Sure. So just briefly, Thiel was sort of born out of a frustration of trying to go from the datafication of an ecosystem. What's most well known is a carbon credit, for example, and go from the datafication or quantification of that carbon credit to its actual productization, i.e. like its tokenization, and then its actual distribution. So what we did at Thiel is we integrated all those functionalities into one platform. So you can go from essentially operating at what we call the ecological edge, where ecosystem data is actually generated, and using drones and satellites and on-the-ground sensors to actually datafy that ecosystem, ecological ecosystem, and then via tokenization, be able to tokenize it and tokenize that data, and then distribute it as a financial product.
So just as a closing question, I think you've touched on this throughout the discussion, but why is tokenization and blockchain so important in this movement that we've referenced here today?
Well, I think for the first time that there's a technology that really allows you to very efficiently represent and track anything. And so it really limits a lot of the frictions or manipulation in any supply chain, really. And so, you know, and you're seeing like the democratization of knowledge through AI, you're seeing the democratization of access to assets through blockchain and tokenization. And the reason that Palm Promax Investments and Thiel as well is so focused on the Global South is this is the chance, I think, for the emergence of an continent like Africa, where they can use these technologies, they can create a stable coin, you know, hedge their exposure to the US dollar, for example. They can have more transparency, as you mentioned, from actually what's happening on the ground to what's going, the path all the way to the government, right? And so it's really, I mean, I can't say it enough that I think it's the most exciting time in financial services ever.
Absolutely. Couldn't agree more. Peter, thank you so much for joining us today, and really appreciate the words of wisdom.
Thank you.
Well done. Oh, actually, gentlemen, are you ready for your close-up? luck. Good luck. Well done. Well done. Don't worry, guys. It's okay. I think my startup idea is to put chairs on rails and have them kind of like, automatically come in and out, like drone chairs. What do you think? Who's going to invest? Fantastic. And then we'll make you drone chair managers. Don't worry. Okay. Very good. Okay, so coming up next, we have another presentation. This one's also very interesting. From Mark Hanna, who is the head of R&D and inventor at Nextcloud. The topic is From Idle CPUs to Intelligent Clouds, the DPIN revolution behind Nextcloud. And just a general reminder to everyone, the timer is right there, so just keep an eye on it. Mark, welcome. Come on, don't be shy. Big round of applause, you're awesome. You don't seem like the retiring kind of guy. It's all yours.
No, I'm not retiring, not today at least. I've got some more work to do. Good morning, everybody. Good morning. Good morning. My timer's going, so let me start moving. Before I begin, I want to set the goal for the next 10 minutes. I'm going to tell you of a problem that we all own, and I'm going to prove to you that we also own the solution. And I'm going to share with you that this solution is defensible, profitable, and scalable. But before I do that and tell you about the problem, I got to ask you a really quick question. Do you remember what phone you used 20 years ago? I'll give you a hint. It was not an iPhone. It didn't exist. Most likely, it was a Nokia, a BlackBerry, or a Treo. Now, the interesting thing is, 20 years ago, you were using that phone, and that is the same time that AWS invented the cloud. Now, today, the cloud, it powers everything, from AI chatbots to online banking. But there is a little problem. The truth is the technology is just 20 years old. And phones, they have increased in speed almost 12 times, but a data center with some servers in it, connected by Ethernet cable, is the 20-year-old infrastructure that still exists today. Now, let me ask you a question. Let's say your spouse came home and they were going to open up an online business and they put that on the table. What would you say to them? Well, let me tell you what would happen. In order for that company to stay in business that they were running, somebody would have to pay for it. Either you would have to pay for your spouse, or your spouse would have to charge more than they needed to stay in business. Guess what? That's what's happening. Because the cloud infrastructure is so old, the truth is that they have to keep charging us more and more to stay in business. 89% in the last 2 years. And they're building all these data centers, but guess what? 80% of the time, they're idle. And they're forcing us to stay in one-tier security because guess what? That's all they got. Now, as we think about this, we own that problem because we all use the cloud. I don't care if you decentralize, I don't care if we use crypto. When we open up the phone, we're using the cloud. But we own the solution also. Guess what? There's 8 billion people in the world. 20 billion compute devices. Do you know that we have technology today to turn that into one cloud? Now look at this. When you think about the power that we have available, it is easy for us to connect these devices and create a new cloud model. It's easy to do this. Think about it. All we do is we load software on these devices called Nanovert Agent. We then classify and price the load lower than AWS. Customers deploy the workloads, and we use our layer 1 blockchain to split the revenue. Think about it. Each new partner adds capacity at negative cost, and partners become customers and vice versa. Scaling actually funds itself. But we have not done anything yet. The only thing we've done is what they did 20 years ago. The cloud is old, and we need to update it, so let's do it today. We add something that doesn't now exist. It's patent pending, and what we do is using trust tier routing, we give the right balance between security and savings. You see, now we're forced to use one layer, but now we establish 4. You can literally use minimum security with 70 controls, or you can use the maximum security with 450 controls. The enterprises, they spend less, and they get access to more. Now, what's very important is to understand something. Natively, when we combine all of this, something magically happens. We actually create a defensible moat. See, the trust tier routing, it is patent pending, so you can't duplicate it. We're always 20% cheaper because we just price it against their model. And when you think about it, this is the most important part now, we scale at 0 CapEx. So Amazon has to spend $16 billion for a data center. We don't. Think about it. Let that set in. We literally harness the CPUs that are already there, and we turn that into a cloud. Now, we already added trust tier routing, which makes it very attractive. When we look at our moat, hyperscalers just can't match, and Web3, they can't compete because they don't have the security that we have. Now, let's think about this for a second. Here's something ironic. It doesn't happen often. We are charging less, but we are more profitable. See, 0 CapEx does 2 things. Not only does it make you scale quickly, but it reduces your operating margin, your operating costs, and increases your margin. So we're actually more profitable than AWS. And we can scale with little or no effort. When we add resellers that almost have 0 cost to acquire a customer, and our OEM license combining that, you now create not just a moat, but you create a highly scalable and profitable company that can grow at a rate that is hard to even believe. Now, this is not an idea. We're live, we're scaling, we have real world demand. 1,800 devices, 10 different countries, 29 clients, 145,000 monthly recurring revenue in the pipeline. We've already raised $2.3 million, and we've already filed 8 patents, and we have a half a dozen left to go. We're on track to have 5,000 servers and a 500,000 monthly recurring revenue by Series A. That's 3 times faster than AWS. I know what you're thinking. How can I be so confident? I'm not confident about the technology. I'm confident about the team. See, the team that's running this is not new for them. They're seasoned operators. They've scaled companies, taken them public, billions of dollars in valuation. They're doing it again. Now, we're raising $5 million to update the cloud. We're going to add 5,000 devices. We're going to achieve our SOC 2 and FedRAMP regulation. We'll bring our revenue to 500,000 monthly recurring revenue. It positions us for full regulatory readiness and our Series A raise. Now, I told you one thing, and I've already shared with you the problem. And I've already shared with you that we own the solution. And I've showed you how we can be profitable, defensible, and scalable. But I want to also tell you a little secret. I'm going to share something with you that most people don't even know. You see, I want
The
you to watch
Nextcloud
this
dev
video
team
for
just
a
shared
second.
an exciting speed test that I need to share with you. We're spinning up Kubernetes clusters, 3 worker nodes each, on Amazon EKS and Nextcloud DCP, and the results might surprise you.
Now, I want you to watch this because I'm going to tell you something after. I'm going to tell you how all of this started. we're doing something that has never been done before. And this is not for fake. This is actually live. We have already completed something in 90 seconds, and it's going to take Amazon 16 minutes to spin up a managed cluster.
AWS finally finished after 16 and a half minutes what Nextcloud did in 90 seconds. Nextcloud, shaping tomorrow, today.
Now, I know what I'd be asking myself if I was you. How is a company that is a year old going to scale at the rate that we've promised? And how do we beat a hyperscaler that have billions of dollars? But I want to show you I showed you the evidence that this is not something that we're promising. This is something that we're doing. And if we did this in 1 year without you, what can we do in 5 years with you? Join Nextcloud. We're shaping tomorrow, today.
I like that. You can build a cloud on time, and you can end your presentation exactly on time. He's like multimodal. It's fantastic. Was that you on the screen, sir? That is, yeah. Stand up and say hello. Hello. With your name, and you can introduce yourself.
My name's Chad Hart. I was actually one of the first investors in Nextcloud in that pre-seed round, and it was a good choice. So it's fun to be here. We really are 8 times faster than EKS. That was a real speed test, and it even gets bigger as EKS's loads get bigger themselves. Our speed maintains as their speed slows down. So we'll talk more in, what is it, room 9? Yeah, come see us.
Very good. Well done. Big round of applause for that presentation. Well done. Okay, so next up we have Omar Abbas, CEO and co-founder of BridgeX. I actually saw them at their launch dinner. It was great. So we're going to welcome Omar on the stage, and the presentation is the UAE's homegrown bridge to the global digital asset economy. Omar. Omar? There he is. I saw your launch dinner. It was great. And of course, you got the wonderful Sophia there. That's good.
Good morning, everyone. It's a great pleasure to be here, and I want to thank you all for your precious time. I'd also like to extend my appreciation to Agora Group for organizing the 15th Global Blockchain Congress and for bringing together such an esteemed audience of founders and investors. Before BridgeX went live, before we assembled our team here in the UAE, it all started in a very different setting. About 3 years ago, my co-founder Adam and I were visiting Dubai for New Year's. We noticed something shifting. I still remember having that coffee with Adam at Ibn Battuta Mall and turning to him and asking, "You think it's possible to launch a crypto exchange here? Built from scratch right here in the UAE? You think we could survive the regulatory hurdles? You think we could even raise the money?" Well, Adam didn't mince words. He just replied with one word: absolutely. Coming from someone of his caliber, a Harvard, JD, and MBA, former Goldman Sachs, that one word hit different. So we shook on it. The name came shortly after. We kept coming back to the word Burj, a reflection of the UAE's posture, building with permanence and intention. We paired it with X, a symbol of execution. That's how BridgeX was born, rooted in this region. But having conviction is easy when the wind's at your back. The real test comes when the storm hits, and you have to keep going anyway. Throughout this journey, we ran out of money more than 3 times. Hit rock bottom more times than I can count. We faced nights where we genuinely thought this might not make it to tomorrow. But having built in regulated markets before, we understood something important. When you're building credible financial infrastructure, the journey is never a straight line. It's a stress test of discipline, resilience, and staying power. In 2018, I co-founded NDAX, Canada's leading crypto exchange. We started with $1 million from friends and family, going up against giants backed by firms like Fidelity. We weren't supposed to win, but we kept showing up. We fought for a banking partner when no bank in Canada wanted to touch crypto. We worked with regulators before regulation existed. And we answered support tickets at 2 a.m. And through it all, we focused on one simple recipe: building trust. Brick by brick, we built something real. And by some miracle, NDAX became Canada's largest regulated crypto exchange, processing over $20 billion in volume, serving more than 500,000 Canadians, and managing over $1 billion in custody. But that outcome, it was just a byproduct of our efforts. It was the journey that taught me how to survive when the odds are stacked against you, how to earn trust, and why that's the only thing that truly matters in crypto, how to handpick a team who believes in the same vision as fiercely as you do, and maybe most importantly, how to recognize when it's time to step away. Not because you're done, but because sometimes the next stage of growth requires a new arena. These are the lessons you don't learn in a classroom. So I stepped away, incredibly proud of what we built at NDAX, but I knew deep down my next chapter had to be built somewhere else. And this time, it had to be even better, even bolder. And it had to be here in a region I've always felt deeply connected to. Because the Middle East doesn't need a copy-paste model from another region. It deserves its own category leader, homegrown, built in the UAE. But the conviction to build BurjX didn't come from NDAX alone. It came from something even deeper. I was born and raised in Canada, but my roots are Lebanese. And if you're from Lebanon, you know the stories of Beirut, the Paris of the Middle East, a place where people trusted their money, their banks, and their future, until one collapse after another erased it all. Savings gone, a currency in free fall, generations left holding paper that used to mean something. But what's remarkable about Lebanon is that the people never give up. No matter how deep the collapse, the will to rebuild never dies. That mindset to rebuild from nothing, to keep pushing when every system fails you, stayed with me. It shaped how I saw trust, how I saw resilience, and how I wanted to build for this region. Because when I came to the UAE, I saw something I hadn't seen in a very long time. Real momentum, a market built on clarity, credibility, and the will to get it right. That belief that this region deserved something better became the blueprint of how we built BurjX. And so I made the leap. I sold my house in Canada, sold my equity stake in NDAX. uprooted my family, left behind everything familiar, and landed here with no license, no team, no product. Just a belief that the Middle East deserved something better. The chance to build something real under the world's leading financial regulator was a decision worth risking everything for. And once the decision of where was answered, the next question became how. How do you build a digital asset trading and custody platform worthy of this jurisdiction, one that's homegrown and could stand shoulder to shoulder with the most trusted financial institutions globally? On July 15th, 2025, that belief became real. BurjX is a UAE-born, FSRA-licensed digital asset brokerage and custodian, built here, regulated here, and designed to serve the MENA region with the same rigor and sophistication as the world's leading financial institutions. Regulated by the Financial Services Regulatory Authority of Abu Dhabi Global Market, the world's first regulator to pioneer a comprehensive virtual asset framework and recognized globally as the capital of capital. BurjX stands as a new standard for trust and innovation in digital assets. We're proud to share that BurjX is the first UAE-born platform approved to list more than 100 digital assets at launch under the direct oversight of the FSRA, a real breakthrough for the region and a signal of what's possible when innovation and regulation move forward together. Through BurjX, investors can now gain exposure to sectors defining the next decade: artificial intelligence, gaming, real-world assets, and stablecoins, all within a single secure platform. From custody to execution, every layer of BurjX was built to meet institutional standards. A robust custody infrastructure powered by Fireblocks, a NASDAQ-grade trade engine capable of handling 1 million transactions per second, direct AED on and off ramps via Zanbank, enabling you to connect your UAE bank account directly from our app and instantly move from dirhams to digital assets. No middlemen, no friction. And most importantly, a user experience that combines institutional depth with retail simplicity. Whether you're buying Bitcoin for the first time or managing an institutional desk, we built this for you. But for high net worth investors, family offices, and institutions who demand even more, we've crafted an elevated premium service. It's called the Private Client Group, the OTC arm of BurjX, delivering a true white glove experience. Personalized execution, dedicated relationship coverage, and access to the deepest liquidity across the largest product suite in the region, helping you build a high conviction, diversified portfolio with the clarity of private wealth, the control of institutional grade execution, and the confidence of a platform made for sophisticated investors. Sorry, 1 minute, Gordon, if you don't mind. Are we okay? But we're not stopping here. At BurjX, this is just the foundation. The next chapter is about expanding regulated assets even further. Through Sharia-compliant portfolio management, regulated staking, and ethical and transparent margin trading designed to protect investors, not exploit them. We're also preparing to launch a crypto-as-a-service solution, empowering businesses across the region to integrate digital assets safely within a UAE licensed framework. Because the mission has always been even bigger than a trading platform, it's been about building the infrastructure that will power the next decade of digital finance in the Middle East. To the investors, the family offices, and decision makers in this room, I will leave you with this. This industry needs infrastructure that's built to last, transparent, regulated, and resilient enough to earn the trust of individuals and institutions alike. That's what we set out to build with BudgeX, not an offshore trading venue, but a homegrown one. Our focus is on building the infrastructure layer that allows real capital to flow safely into this asset class for decades to come. Well done. The future of crypto has a new home right here in the UAE. Thanks, Gordon. Thanks, Hadi. And looking forward to chatting with all of you soon.
So I got a chance to see Omar give the extended version of that during their opening dinner. It's actually a very interesting product and platform, and the licensing gauntlet that they went through with ADGM is impressive, and I applaud you for sticking through it. That was inspirational. Well done. So next up, we have a great presentation, Ken Komatsu, founder and CEO of Golfin, on the topic of merging real sports and esports through Web3. Good to see you again. Big round of applause. You're going to have to speed run a little bit.
Yeah, okay.
You got this, right?
Okay, thank you. Okay, hello everyone. Thank you. My name is Ken Komatsu, founder of Golfin. Today, I'll show you Golfin, a new world of sports and esports. Our dream is simple. Move the world through sports and fun. So many blockchain games failed. They are not fair and not real. Over $6 billion were lost in bad projects. People do not trust those games. We want to build a real and safe game world. Golfin connects real golf and digital games. You can play golf outside and also play in our game. You can win prizes in tournament. It is not just play to earn. It is a move, grow, and win to earn. Now is the best time for golfing. Esports is growing fast, over 10% every year. Fitness and Web3 are new global trends. Young people love health and experience. We connect all three trends in one platform. The market is huge. Esports, fitness, Web3 games. Golfing is in the center, new blue ocean. Other models have problems. Play to earn is not sustainable. Move to earn has weak gameplay. Traditional esports are not linked to real life. Golfing is different. It connects real sports, fun, and stable economy. We give users real-world rewards. So, this is our two apps. One, Golfin GPS, like a Pokemon Go, and mobile golfing game. Golfer plays outside and earn points with GPS. Game players play the mobile game and earn points too. They can lend and borrow item and avatar, join tournaments. Everyone can win together, golfers and gamers, like a horse racing. We have three ways to make money. One, selling game items. Two, ads and data from GPS users. Three, golf course and sponsor promotion. So both online and real golf bring income. We have a great global team. We work with Manabu Seko, former Capcom Mobile president. Our art team is from Japan, India, and Europe. We all love games and sports. Our company is in Kyoto and Tokyo in Japan, and we work also in Singapore and Switzerland. We have 40 members, and we keeping growing fast. We already have more than 100 partners, like MX Ventures, Tokyo Golf Resorts, and Resort. Together we build tournaments. Golf is not alone. We are part of global team. Golf is going global. We start from Japan, Singapore, and Switzerland. Next, we expand to Europe, the Middle East, and the US. Our first world event was CentOS Golf Masters last month in Singapore during Token 2049 week. Our vision is clear. Let's build a global esports ecosystem. Golfing connects sports, games, and dreams. We give people a chance to play and smile. Thank you very much.
Hadi, why don't you, Hadi? Okay, I'll carry you with it. So that was our morning presentations. What's gonna happen now is that we're gonna have a 25-minute coffee break and networking session. So take advantage of this time, go caffeinate, go get your carbohydrates, and get to know each other, meet some new people. Then from 11:15 to 1 p.m., those are the investor/prospect meetings. Then we have prayer break and lunch from 1 p.m. I'm showing I'm American, from 1300 to 1400. And our stage portion will start again at around 2 p.m. Okay, it's all in the program. So give a big round of applause for our speakers so far. Hadi, I was calling your name, Mr. Come on, you dapper devil. I was letting them know the sequence coming up, but maybe you want to say a couple words about how it all works with the matchmaking?
Yes.
Okay.
Okay, hello everyone. We're now gonna break for coffee, and then we're gonna head into the one-on-one meetings schedule. The one-on-one meetings are conducted in the adjacent room over there. Every sponsor have their own table, and it's clearly indicated their names and their table position. This is where, this is what we are famous for. This is where all the magic happens, those pre-arranged meetings. So please make sure that you are attending the meetings at the time. Everybody should have a schedule for the meetings. And best of luck. After the meetings are done, we're gonna meet again for lunch. Then after lunch, we come back into the conference. Thank you and enjoy it.
Amazing. Go make new friends.
Whenever I'm not with you.
Is an illusion. In the heart of space, through the veils of time, humanity reaches out and touches the stars, weaving the river of eternity with dreams and discoveries. Can you realize what is unreal? Eternity and space. Knowledge is an illusion. In the heart of space, through the veils of time, humanity reaches out and touches the stars, weaving the river of eternity with dreams and discoveries. Like a flame in the cosmic wind, humanity illuminates the void.
myself up off the floor. Can't take no more. My patience has been tried. Something that I can't deny. Take the lows, then come the highs. I still survive. You and I don't make no sense. But something I can't fight. Down the street before, memories knocking on my door. Pick myself up off the floor, can't take no more. My patience has been tried, something that I can't deny. Take the lows, then come the highs. I still survive. You and I don't make no sense. But something I can't fight against.
have dialed is not available at present. Please leave your message after the beep.
Show me things I've never seen. Hey, Mr. Postman, walking fearlessly, but now I fly. I hear your voice deep in the water. With you, everything is worth a try. I feel your love. You are my shelter. You're the hope, my reason why. I hear your voice deep in the water. With you, everything is worth a try. I feel your love. You are my shelter. You're the hope, my reason why. Angakude sema dirando kuita. Diani anenge alipo soma Diani angakude sema dirando kuita. Ando kuita. Diani anenge alipo soma Diani. Diani, angakude sema dirando kuita, ando kuita. Diani, anenge alipo soma. Diani, angakude sema dirando kuita, ando kuita. Diani, anenge alipo soma.
Se la pasan diciendo que soy mala, porque no me aguanto drama de nada. Dime si vienes a mi cama. En la fama, se la pasan diciendo que soy mala, porque no me aguanto drama de nada. Dime si vienes a mi cama. En la fama, se la pasan diciendo que soy mala, porque no me aguanto drama de nada. Dime si vienes a mi cama. En la fama, se la pasan diciendo que soy mala, porque no me aguanto drama de nada. Dime si vienes a mi cama. Se la pasan diciendo que soy mala, porque no me aguanto drama de nada. Dime si vienes a mi cama. En la fama, se la pasan diciendo que soy mala, porque no me aguanto drama de nada. Dime si vienes a mi cama. Se la pasan diciendo que soy mala, porque no me aguanto drama de nada. Dime si vienes a mi cama. En la fama, se la pasan diciendo que soy mala, porque no me aguanto drama de nada. Dime si vienes a mi cama. En la fama, se la pasan diciendo que soy mala, porque no me aguanto drama de nada. Dime si vienes a mi cama. En la fama, se la pasan diciendo que soy mala, porque no me aguanto drama de nada. Dime si vienes a mi cama. set aside. Under neon skies we burn. Hearts collide with no return. We lose ourselves in colors bright, chasing dreams in endless night. Chasing dreams in endless night. The pavement whispers tales untold. Fingers brush but never hold. I'm caught between the dusk and dawn. Every glance a spark of fuse. In this maze I'll never choose. Under neon skies we burn. Hearts collide with no return. We lose ourselves in colors bright, chasing dreams in endless night. Chasing dreams in endless night. Neon sky, they hum so low. Shadows dance where the warm winds blow. I'm chasing stars, but I lose my way. Whispered secrets, hearts unfold. In the dark we find the gold, lost in the glow. I can't let go, spinning in circles. The night moves slow, lost in the glow, where dreams overflow. embrace the midnight air. Shadows dance there everywhere. Your silhouette, a fragile flame. And I fall into your quiet call. Moonlit whispers in the dark. You ignite my faintest spark. Round and round this endless arc. Moonlit whispers, they leave a mark. Eyes like oceans pulling me in. Tides of longing beneath my skin. I'm shipwreck on your shore. And I drown in your echoes all around. Moonlit whispers in the dark. You ignite my faintest spark. Round and round this endless arc. Moonlit whispers, they leave a under the neon moon. Shadows dance in pairs. Heartbeats echo loud in electric air. I see you standing still, but your soul's not there. Are we close or just pretending? Is this real or never ending? Eclipse desire, burning slow, falling deeper. Don't let go. Eclipse desire, can't you see? The only thing we need is we. Fingers trace the night like whispers on the sea. Every breath you take feels like gravity, pulling me closer. We're on a beat. Are we dreaming? Are we falling? Is this love or just a calling? Eclipse desire, burning slow, falling deeper. Don't let go.
dreamlight shows. Take me back where the feeling grows.
is wide. Falling deep, no place to hide. Starlight echoes, pull me close. Every heartbeat, I feel it move. Starlight echoes, soft stain on my heart and on my sleeve. Why do we hide when the moon knows it all? Why do we fall if we're not meant to call? Moonlit confessions in the dark. Every word ignites a spark. We're lost, but we're alive tonight. Underneath the silver light. Your voice a velvet stream. It haunts me in my dream. Dancing circles in my mind. We're caught in this charade. A love that's bound to fade. But it feels so right this time. so low. Shadows dance where the warm winds blow. I'm chasing stars, but I lose my way. Whispered secrets, hearts unfold. In the dark, we find the gold. Lost in the glow, I can't let go. Spinning circles, the night moves slow. Lost in the glow, where dreams overflow. Soft lights flicker, a fleeting trace. Time dissolves in your embrace. The rhythm pulls, we melt, we sway. Electric hearts, they beat as one. A quiet fire till the night is done. Lost in the glow, I can't let go. Spinning circles, the night moves slow. Lost in the glow.
We will be starting in about 10 minutes. So if you're still eating, please finish up.
Fingers trace the midnight air. Shadows dance, they're everywhere. Your silhouette, a fragile flame. And I fall into your quiet call. Moonlit whispers in the dark. You ignite my faintest spark. Round and round this endless heart. desire, burning slow, falling deeper. Don't let go. Eclipse desire. Can't you see? The only thing we need is we.
Okay, what day is it? Where are we? What's going on here? Did everyone have a good lunch? Did everyone have a good lunch? Is Agora the best? Is Agora, sorry, thank you, Heidi, you're very biased, okay? Sorry, is everyone in the room the best? Guys, I swear I'm gonna keep yelling until we get some energy action. Join me. Did everyone have a good lunch? Thank you. Did you meet good people? Did you have the gnocchi? Are you still awake? I'm a complete carbohydrate bomb, and thank God I get to be on stage and dance around and get invigorated. Heidi, how are you doing? I think you should stand up. Heidi. 15 times in a row, people. Okay, Global Blockchain Congress. How do you do it? I know the answer is your wife, but fantastic. Well done. And I think everyone behind the counter there, or whatever you want to call it, the AV section, the media people, stand up, get some credit. Guys, if you don't stand up, I'll come back there and I'll make you stand up. And of course, the furniture people. And you, sir. I've been watching you all day. You're fantastic. Thank you. All right, amazing. So, you feeling it? You feeling it? I'm like verbal Adderall. Okay, so next up we have a panel discussion. It's crypto's next chapter. Am I doing this right? Yes. From hype to fundamentals. So I'd like to invite our moderator, the Vice President of Global Development. Oh, Luna PR, my favorite. Luna PR. Hamid Fakirzai. Am I saying that correctly? Hamid. Good to see you. By the way, I love Luna, and you guys partner with us on Tech Tuesdays. Absolutely. Yeah. You're amazing. Okay, you'll introduce your co-panelists?
You want to call them up and then they'll do introductions on stage?
Okay, I'll do that. No problem. Alec Go, head, HTX Ventures. Come on up. Karan Gandhi, good name. Come on up, Cypher Capital. Mohammed Ezildin, head of tokenomics. Animoca Brands, very nice. And Petra Hluze, we're going to correct all this. General partner of Namu Capital. Wow, excellent.
Amazing.
Okay, now you got it, right?
Yeah, I got it.
And I think he gets more than 5 minutes, AV people. Yes? Unless you want to do a speed panel.
We have to wrap it up in 5, yeah.
Yeah. I mean, like introductions and then wrap it up.
All right.
3 hours, 30 hours. Okay, 30 minutes. Very good. Okay, big round of applause.
Thank you, Gordon. The best. So yeah, he did a great job introducing us. My name's Hamid Fakirzai. I'm from Luna PR. I'm the Vice President of Global Development. We're headquartered here in Dubai. We've been participating with Agora for the last 4 years. They've been amazing. And yeah, I'm excited to get into the topic. And I'll let the other panelists sort of introduce themselves, their backgrounds. We'll do 30 seconds each so we can get right into the meat of the discussion. So if you want to start first.
Yeah, thanks for that, Hamid. I'm Alec. I'm head of HTX Ventures, previously known as Huobi Ventures. So it's a strategic investment arm of the exchange HTX. We've been around for the past 12 years now. And in terms of the ventures team, we've invested in more than 250 projects over many years. And yeah, glad to be here today. Thanks, guys.
Hey guys, my name is Karan. I'm a partner at Cypher Capital. We are a Dubai-based multi-strat prop investment firm focused on digital asset, of course, and been deploying in the last 3 years, most mainly on core infrastructure projects. So we're like Series A investors of Sui, also like a big holder of Solana in the region. And our focus primarily started very early stage, and now we're slowly moving into more institutional and big ticket investments as well. So glad to be here and sharing my insights.
Hello, GM, everyone. I'm Mohammed Azuddin. I'm the head of tokenomics at Animoca Brands. For those who haven't heard of us, we are an ecosystem builder, if you like, with over 600 companies in our portfolio. I also wear the title of President of Open Campus Foundation, which is our education protocol, and really looking forward to sharing more on today's panel.
Okay, hi, everybody. I'm Peter from Namu Capital. I'm GP there. And we focus on FinTech 3.0. That's what we call like on-chain finance, tokenization, and stablecoins.
Awesome, amazing, thank you guys. So this topic is super interesting to me because usually when we think about crypto maturing, we talk about hype versus fundamentals, the contrast between the two. And
I think it's interesting to get your guys' perspective on whether it's a contrast between the two, if it's a layer on top of another, or what the balance should be between the two, right? So I guess the first question I want to talk about is that we used to think hype was shallow, right? We thought meme coins, NFTs, things that had narrative hype, retail community hype, and not so much the institutional interest, right? Today we see Deepin, RWA, we see DATCos. It's a different kind of hype, and I want to know from you guys, is it progress, or is it just rebranded as institutional speculation? So Alec, I don't know if you want to go first and sort of address the difference in hype between the two different.
Yeah, sure. Thanks for that. Well, I think in terms of whether it's hype, well, I think definitely it still is, right? I mean, things often rhyme, and it's not much different this time around. Even though the players has kind of evolved from more retail whale type from the past cycle to now more institutional-based traders as well as investors. So what we are seeing right now, you know, compared to the previous cycle in 2021, 2022, there was GameFi, play to earn, NFTs, and now is, as you mentioned, is more digital asset treasuries, which is, you know, essentially it's just stock exchange listed token companies, as well as RWAs. So in a way, it's still very much hype-driven in this space, right? And I think that's still very critical at the moment, because if you want something to really build up its fundamentals, you first need to attract the capital, and that's where, you know, the hype comes into play. And whether or not this cycle round will play out the same as the previous cycle is still to be seen. But you know, with institutions coming in, I think the playbook would be a bit different this time around.
Yeah, and I think just to add to that, what do you think about the fundamentals of the current narratives, right? So when you look at the major RWA players or the DATs, do they have the strong fundamentals that sort of they have the reputation of because of the institutional investment behind them?
Well, I think you have to differentiate between the different types of RWAs as well. So, for example, some of the DATCos, if we are talking about Bitcoin DATCos, I think these have real fundamentals to it. But if you are talking about any other DATCos that are just listing, you know, tokens in order for some VCs to offload their locked tokens, you know, it doesn't really change the game. It's basically the tokens remain the same. You just have different you know, capital flows coming in to help support the price action, which probably will not end well as well. So it really depends on the specific type of you know, the RWAs or the DATCos you're talking about. So I think there's some nuance to it as well.
Yeah, Karan, I saw you pick up the mic there. I'd love for you to.
I want to see it from a different lens, right? I think talking a bit more insightful on the hype to fundamentals thought process, right? Go back to 2017. You know, majority of the projects that launched at that time, it was 100% hype. It was all marketing. All budget was spent on marketing, and it was a white paper, right? Fast forward, let's say a 2020 cycle where we had the DeFi summer that came in, right? I think a good percentage started believing in the fundamentals of payments, DeFi, and the sort of utility of blockchain. And maybe 30% was fundamental, 70% was still hype because people were making money off of it, right? Today, as institutions are entering the space, I think the drive towards fundamental has increased. And I think I was just talking to one of my other fellow VCs previously today about how even my personal portfolio has changed over time. In 2017, when I just entered, I had like maybe 20, 25 coins. By 2020, I was over 100 that I hold in my portfolio. Today, I have less than 10 because I am focusing more on institution, more on fundamentals. And I can give you a case here, right? There's a project called Maple Finance that started in 2019. It is one of the OG projects in DeFi, was part of the whole DeFi summer. They started off as an unsecured lending platform, right? Because you had Aave and everyone picking up, they felt it's a good opportunity to get in. These guys sort of completely got fallen back with the whole FTX crash because they got hacked and they lost a lot of money, lost people's trust. And the team was swift enough to realize that, hey, institutions would come one day. And we need to become a bit more sophisticated, have proper procedures and due diligence for our clients, and let's move from unsecured to secured lending. Last year, they announced this pivot, right? And start of this year, we've been tracking it year round. Start of the year, their total value locked, which is what they manage, was around 300 million. Today, it's 5.1 billion. They have almost 13 times their capital that they have raised because of only one thing, that they've gone a bit more institutional, focus on fundamentals, focus on getting TradFi related procedures and sort of due diligence in place, and they've been able to attract them today. So I think as we move further, institutional adoption is going to grow, and people should only look at fundamentals. You will have a hype element for sure. It's crypto, right? If you not find a funny, attractive offer on the pitch deck, it doesn't make sense to even have a call with them, right? So you'll always have hype. You'll always have crazy marketing budgets. But I think as you move forward, you will look at more the utility that project brings in the ecosystem and how much of that revenue is going back to the token to drive that token's economy. So that's what matters.
And I want Mohammed and Petter, if you guys have anything to add to this.
I just want to ask you guys a quick question. How many of us here own meme coins or shit coins? Quick show of hands. How many of us own Bitcoin? And I think therein, if you look around the room, you can see the difference quite instantly, especially in where we are today in the market. It's a lot more based on fundamentals than based on hype, but also testament to the people in this room as well, that it's not necessarily here for the quick buck with meme coins, but more so here for longevity. I think to the point, and Karan, you made an excellent point of the evolution from hype into fundamentals. We've all heard of Solana. Solana was a white paper project in 2017 that raised a lot of money, and we fast forward to today and we can see that it's one of arguably the better performing blockchains in terms of speed, but also in terms of TVL, and they have their narrative. I feel coming back to the fundamental aspect, we know regulation is always a lagger behind innovation, and we're starting to see regulation catching up, which is why the guardrails are in place for a lot more institutional investment coming in, which is to the point that you made earlier around a lot of the DATCOs that have been forming. And the majority of these DATCOs have actually been forming around tokens or around ecosystems where there's an actual use case for the token or there's an actual community for the token. And I feel that the point that I'm trying to make here is if you're focused purely on the institutions, then all you need is fundamentals. But if there is that retail and community edge, then you do need that hype factor as well. And the other aspect is hype comes based on the market cycle. When it's a downturn in the market, it really isn't about hype because there's no new entrants coming into the ecosystem. And by that, I mean new money, retail money coming in. What's driven a lot of these cycles from 2017 to 2020 to 21 with the NFT run, and more recently as of the end of last year, beginning of this year, or maybe outside of the last year, the beginning of this year, has been the introduction of new retail money coming into the space. We haven't really seen that. A lot of the money, or the bull run, so to speak, we're in now is focused a lot more around the major tokens that have been in existence, or the projects that do have genuine fundamentals and are making a change. And I know you focus on Maple Finance. I feel another one to focus on with the RWA aspect is actually Open Campus, where more recently, what the team has done is they've tokenized student loans. So they've brought $1 million of student loans on chain based out of the Philippines with notion to expand that to $10 million and grow within the region. Why is this important? Well, you've got the fundamentals on one side, but you also have the ability for institutional money to put capital into a real world asset that can generate revenue, but also has positive social impact at the same time. And I feel that's what we're going to start seeing more of moving forward as well.
Yeah, and amazing what you guys are doing in the Philippines, by the way. Petter, do you want to add something from a VC perspective, from that lens? How do you evaluate projects that have strong community, strong hype, but weak fundamentals, or vice versa?
Okay, I just wanted to link to the previous question.
Yeah, of course.
Or the answer, more other answer. I think the hype and hype cycles and narratives will be always here. Like, industry is maturing, but it's just human behavior. It's going to be here. You can see it on equities as well. And equities are much more mature than crypto, and there's still a lot of the hype cycles as well. But on your question, how do you evaluate
How do you evaluate projects that come to you for funding that have strong communities, weak fundamentals, or vice versa?
Okay, yeah. So at NAMU, we are focusing more on Web 2.5, so it's naturally a little bit more towards fundamentals. But also, like, looking at the stage of the project we invest, it's pre-seed or seed, and in pre-seed, even if we want to focus on fundamentals, that's often, there are not many to focus on. Fundamentals can be technical or technological or traction, like revenues, but revenues in pre-seed, it's very rare. Then depends on the project type. Let's say if it's infra or L1, that you really need to focus on the technical side. But more on community or hype side, I would say retail-facing projects like Neobank, often that's mainly about ability to attract users than really having like something groundbreaking technological solution. Especially on that Neobank stablecoin side, you will just plug into the middleware and that's done, right? So it's you won't need that technical solution. It's more about ability to attract users and execute and protect. So that definitely we can invest into those kind of projects.
Amazing. And so a lot of interesting opinions across but it's still uniform, right? You guys sort of agree on that main pillar, that fundamentals will eventually create hype, or one can't live without the other. Institutions today are chasing fundamentals, revenue, etc. And retail, on the other hand, chases excitement, narrative, and things in that scope. I'm curious, when we think about the market today, what truly drives the direction of it? Is it more than we saw it a year ago, right? With the pump fund Solana narrative, where all the liquidity in the market was going towards Phantom and the Solana ecosystem. It drove the market direction for a while, and now we see it sort of pivot and go towards DATs and RWAs and Hyperliquid is doing amazing stuff, right? Perp dexes. So which one really navigates or chooses the direction of the market? I'll start with you, Alex, since you come from the HTX Venture side.
Yeah, sure. So I think in terms of which drives the direction of the market right now, whether it's institutions or retail,
yeah.
That's the question, right? Well, I think definitely in this cycle, the direction of the market is being driven by institutions. Just look at, after the spot ETFs were launched, how much Bitcoin has run up, how much Ethereum has run up. So in terms of size, right, if you just purely look at, just in terms of the market cap, how much has moved, it's definitely moved by more institutions. And these institutions have studied the market for years. And finally, they are able to deploy their capital into the space through a more regulated, manner to do that through ETFs. Whereas when we're talking about pump fund, when we're talking about Hyperliquid, all these are still, in my opinion, and from the data I've seen, is still primarily driven by crypto native people. So the size is definitely much smaller, right? And the volatility of these tokens are much higher than Bitcoin, Ethereum as well. So I would say it's two pretty separate and distinct market at the moment. One is, as I mentioned, is predominantly driven by institutions, and the other predominantly driven by retail and whales of the crypto native side. But if you guys have any other observations, please feel free.
No, I think I kind of agree with. So I do believe on Peter and Mo's previous point on if it's consumer-facing, retail-oriented, hype would still exist. Yeah, it's a fair point. Like institutions really want to focus on fundamentals, and say retail might still be excited about new hyped projects. But when it comes to who's driving the market, I feel projects like Pump Fund, as we mentioned, they're great experiments for the space, right? I don't think Pump Fund is dead yet. I also don't think meme market is dead yet. There'll be one big meme that might come one day and then just the whole market starts again, right? So I feel retail is there. They're just like navigating the whole, headwinds right now. And majority of the contribution for this cycle has been with institutions because it's visible, right? With the ETF, with the capital flowing in DeFi, and it's very natural to them, right? I mean, TradFi is not talking about tokenized credit would be funny, right? So for them, it's very natural. They're excited about building products. They're also now experimenting new structured products, right? So I think there's a lot of capital inflows that'll come there very soon. And I'm sure a few protocols are already looking into exploring that segment as well. I still feel the institutions' market, like mind share, would be more going forward. Retail would still continue to be on the sidelines, but still be part of these mini sparks that we have, which we call hype cycles, right? Short-term hype cycles, where you'll have certain sectors really going sort of going beyond all-time highs. But institutions will continue to drive. I think also a lot of things that have happened in the industry in terms of VCs as well, right? I can just give my point of view. Cypher, when we started, we were a completely token-friendly VC. We only invest in tokens. And slowly how we're moving into institutions, we're also looking at equity today. I mean, we've never look at such deals like 3 years ago. So I think where we place ourselves, we're also trying to be a bit more positioned on the institutional wave and get exposure ourselves to all the DeFi infra bets that are going forward grow over time, and then we want to ride that wave a bit more than the retail-centric wave, as it's very hard to choose and pick and choose the right opportunity when it's retail-centric companies or projects. That's my point, yeah.
I think you see a theme here. How many founders do we have right now in the room? Okay, how many founders want to launch a token in the room as well? Okay, so quite a few of us. I think one of the biggest misconceptions that exists in the space is the user type for your token. In reality, your traditional user in Web2 has zero interest in a token. And it's actually your Web3 user who's the one who will come in and use the token. And from a persona perspective, what a Web3 user wants is ROI. So it's actually the thought process and the mindset you have towards launching your token. Whereas from an institution standpoint, are they interested in tokens? Or they can be, if it's a token that's liquid and that there's a lot of volume within there. And we've seen that with a lot of the DATCOs that have been launching. But I feel that there's a split. And I know you touched on Web 2.5. For me, I feel Web 2.5, or that overlap in the Venn diagram, is a very challenging space to be in, because you're not appealing to either or by trying to package something for two different audiences, if that makes sense. For me, the institutions, they want to come in on something they understand, and equity is something they understand, or DATCOs is something they have much more familiarity with. But then for the Web3 user, they don't really have access to those instruments. So for them, it's the token. How can I come in on a token, and how can I make ROI on the token? And earlier we spoke about that we haven't seen new retail money really come in. Retail in crypto is poor right now. There are very few pockets that are not the case. We touched on Hyperliquid. Hyperliquid is one of the exceptions to the rule, because the mafia, but why? They found product market fit, they were revenue generating, and when they dropped their token went on a run from $2, and I think it's at over $30 right now. Don't quote me on that, but it should be around those ranges. And that's because they had the community first, they had the fundamentals in the tech, and then the token became the vehicle for the hype, it became the vehicle for the network effects. 100%. And with their tokenomics, it's to buy pressure on a token based on the fees. That makes a lot of sense, because the product around the token is a Web3 product through and through from that perspective. But for a lot of projects who are launching tokens, the product they're interacting with is not a Web3 native product. It's more a Web2 product where the token has utilities, there's governance. In reality, most of these, having designed a number of these myself, if you're aiming at the Web3 audience, they don't care about utility. They don't care about governance. They care about number go up. So it's how can you design a mechanic around the token specific to the Web3 gremlins in the trenches, if you like. But on the equity side, it's a very different value proposition. And I feel that's something specifically for the founders in the room, not to get lost on trying to fit a token to both.
Yeah, do you want to add to that, Peter?
Yeah, just quickly, with my enough time. Yeah, especially on this Web 2.5 side, we see like maybe more than half of the project will never launch a token. First, it maybe doesn't make a sense for their use case, or it's just not possible because they're touching the banking infra, and banks will not allow it. So we will probably invest maybe half of it into equity, and then it's a different game a little bit. Yeah. And one more thing to add to the original question, the retail or institutional driven
yeah, please.
Hype in this cycle. Definitely more towards institutions because retail really doesn't have that much money as before. But we still see these pockets of frenzy, like in the Korean market, it's up a bit. It's always driving the prices in a specific time frames where the volume is low.
It's harder to list on Upbit than Binance, I'm telling you.
Yeah.
Awesome. And how do we get retail back engaged? How do we get retail liquidity back into the market? You guys are all saying that it's become a bit dry from the retail side. Is there an opportunity to get that same sort of liquidity that we had, in the last cycles?
You want to go first? Okay.
Yeah, I can try. I mean, a lot of activity was driven by the speculation, and the crypto is maturing, or Web3 is maturing, so I guess the people also get burned, so it's pretty difficult. We can definitely get users who are looking for utility, because there is more utility now on the market. But I'm not sure we're going to see this crazy retail adoption as before, because it was really driven by speculation, which is not bad by itself, but if it's only the speculation, that's not sustainable.
Yeah, I'm inclined to agree. I think what we've seen through the market cycles is there's been less and less retail money coming in, to the point you made that retail has been burnt. If you've had one negative experience, I might try a second time. If I've had a second negative experience, highly unlikely I'm going to try a third time. And that's been retail's experience coming in if they came in 2017 or 2020 or 21, and more recently as of last year. I also feel we're seeing less and less tokens do that 100x, so to speak. So it becomes a lot more. I mean, now projects are struggling to do a 2x or 3x on listing. So the appetite to make money, the appetite is still there, but this idea I'm going to make 100x is non-existent in the space. And for meme coin launches, if we're being completely honest, it's an insider game. If you're part of the inside, you'll make money. If you're not, you'll exit liquidity. So I think that's something that we have to be open and honest about. But then two, and I've gone off on a tangent. What was the question again? Sorry.
It was more about how do we get retail back in? Is there a possibility for that?
I think this is where it comes down to the actual user experience. And all of us are old enough in the room to remember BlackBerry Messenger, yes? Everyone here had a BlackBerry at some point. Why? Because there was network effects. Everyone was on BlackBerry, so we all wanted to be on BlackBerry Messenger. The issue that BlackBerry Messenger had is that they created a moat around their product, which kept people specifically within the BlackBerry ecosystem, as an example. And then WhatsApp came along and WhatsApp, if you like, was operating system agnostic. I can have it on iOS and I can have it on Android as well. And what you saw was an adoption to WhatsApp because there was more people using WhatsApp. And it wasn't because of the tech it's built on, even though a few years back, who remembers when Meta acquired WhatsApp and we were all worried about our personal data? Quick show of hands. How many of us downloaded Telegram or Signal as an alternative? How many of us are still using WhatsApp? And I think that's exactly the point. It's because of the network effects and having a product that works and hitting critical mass. And sort of coming back to the hype element, it's you leverage hype for user acquisition, and then you use the tech to keep people there. And I feel that's what we need for retail. It's less on let's sell decentralization, let's sell ownership. We've hit a saturation point in the space of people joining for those specific aspects. It's now around problem solving and user experience and just what's the top of funnel user acquisition to bring people into an ecosystem. I feel once we do that and people start leveraging platforms and technologies, they can then discover the crypto element. They can discover there's a token, there's an NFT, there's a digital asset that accrues value over time. Versus I'm coming in to buy an asset to become rich quick.
Yeah, and that's why gaming is so important, right? That's why everyone sort of, got
even
there.
Mochaverse is important with distribution of IDs.
Very.
My view here is, I think Mo covered a lot and Vin Peter as well, but I feel the retail will continue to be there until and unless we don't make any return year on year on the top 10, top 20 tokens. Till the top 20 tokens beats the benchmark of S&P and other international markets, retail will still be excited to see what's happening in the space and maybe participate. Of course, with the recent liquidations that we've all seen, and it's not great for the industry because everyone gets burned over time, deters the growth for sure. But I think instead of an exponential growth in user base and sort of participation, I feel it'll be more linear from what I see. And institutions will continue to grow, and slowly the retail will continue to participate, maybe with different experiments and new ideas and new products. I think what Mo said was products that don't even touch the base, which is not even touching blockchain, is simple. And we always say this, right, as investors, like, blockchain as a technology should never be sold as an engine that sits next to you and you can tweak it. It's not like that. It's an engine at the end and you've got the steering wheel to drive, right? So we have to detach the tech components, make it simpler, making it easier. I think payments, that is the new meta right now. Everyone is talking about it, but I genuinely believe that payments and some sort of a end-mile payments app would really drive the growth of users at least holding crypto in their savings app or whatever that type of app they actually use. But in terms of like direct participation, I think trading market and then the community that trades is always there because they always like the volatility aspect of crypto. But I'm talking about the real retail that wants to participate. That'll be a bit slow and be a bit linear over time. That's my view.
It's hard to disagree with you guys. Alec, do you want to add anything to that? Or cautious of time? Most overhyped and most undervalued, each person.
Most overhyped and undervalued.
So one for each. What's the most overhyped narrative? What's the most undervalued?
Maybe it's easier when I start. So for me, next L1, most overhyped, and most undervalued, boring middleware.
Okay, fair enough.
I thought we were giving token tickers right now.
I was going to give tokens.
Narratives, no token tickers.
I mean, most undervalued, there's a lot of bias here, is actually EDU token on Binance. It's our education protocol. So I need to give a soft chill there. I think most hyped, interesting. Probably World Liberty Finances token is probably quite a hyped
I was waiting
token.
for one of those.
Actually, I have the same view. But I would say maybe in top 5, top 6, most overhyped, I would say Cardano. I know I get a lot of hate for this, but I genuinely believe it's overhyped. And the most undervalued, I would still say is, let me think on it, maybe Athena.
Anything there?
Yeah, so for me, I think what's most hyped, overhyped, probably like what you mentioned, the old dinosaur coins that are still taking up pretty much of the top 10 tokens, for example, as Ripple as well. I hope I don't get a lot of hate for this, but I think it's, there's not much fundamentals there. And most undervalued, well, at the moment, I haven't really seen any, right, at the moment, that is not overly valued at the moment, yeah.
Great. Thank you guys so much for joining us today. Thank you guys for listening so attentively. And then please join.
Thank you, everyone.
Who's the most overhyped person? Group photo where? Oh, gentlemen. Front and center. Smile. Okay. Well, honey, that poor guy, Okay, fine. Big round of applause. Well done. I like that. That was a good reboot after lunch there. Okay, next up we have, are we good with the chairs? Next up we have another fantastic panel. This time it's reimagining infrastructure, how DePIN is powering decentralized finance. So I would like to welcome on stage the moderator, Mona Tiesler. Mona, big round of applause. Should I summon your co-panelists? Good to see you, Mona, as always. Amit Mehta, partner of Borderless Capital. By the way, I'm sorry, I didn't mention, Mona is awesome. She's head of investments from Tokentus Investments. Hey, Mona. Cool. Amit, please. CJ Anand, director of advisory GAF Group. Sebastian Bloom, founding partner of Greenfield. And Shaishav Todi, general partner at Lemniscap. Big round of applause for all of them. Big round. Very good. Good to see you. Yeah. This is like a reunion, except for you. No, just kidding. All right, go for it. Enjoy.
Thank you
Mona,
so much.
You have it,
Appreciate
right?
Yes.
Are we going to speak in German later?
Do you want to?
Natürlich.
Perfect. Let's do it. Okay. It's really nice to be here, and I'm really excited to have a panel with such incredible panelists. We'll do the typical, right? We'll do a little bit of introductions first, and then we'll deep dive into questions that I hope will be a little bit more informative than, generic questions that you often hear on infrastructure panels. So without further ado, I would hand over, and we'll just go round robin, and everybody gives a quick intro on them and their fund, please.
Hey everyone, I'm Amit. I'm one of the partners at Borderless Capital. We have both a VC and a liquid strategy. Like over 300 companies in the portfolio now across the funds. On the VC side, we have 3 funds which are actively deploying. One is focused on interoperability, cross-chain, more infrastructure flavor deals there. The second one is very deep, related to this panel, Deepin. That's a third vintage fund. Both of these are early stage. We like to come in early, like to lead rounds in the pre-seed seed. And the third strategy is more slightly agnostic capital growth stage. And then we also have a liquid fund which does liquid Bitcoin options, very opportunistic, recently participating in over 15 DATs. Yeah, those are the 2.
Perfect, thank you. Hello everyone, my name is CJ Anand. I am a Director of Advisory at GAF Group. At GAF Group, we are a Web3 conglomerate. So we have a family office. We were the first family office set up in Dubai in 2018, locally based over here. Made over 90 investments in the space, early investors in Polygon, 1inch, Layer 0, to name a few. Then we also have a consultancy and advisory arm that we work with some of the big players to bring them into the region. So we also managed to support Sui and Bybit with their growth and their move to UAE. And then we also have a marketing and a market-making division as well. Very excited to be here today and looking forward to having this conversation with you.
Hello everyone, this is Shaishav here from Lemniscap. I'm a general partner there. We are an early stage crypto native fund. We are into our 3rd fund, nearly deployed most of it. So we should be on our next fund in Q1 next year. What I say is we are a generalist fund, so we invest across the sector. We treat each deal as itself. We do Deepin, DeFi, infra, a lot of DEX perps, and basically everything, but hoping to have an interesting conversation here.
Hello everyone, my name is Sebastian Blum. I'm a co-founder at Greenfield Capital. We are originated in Berlin, but now pan-European with 22 people. We are investing out of 2 funds actively into early stage venture and then what we call liquid venture into public listed mainnet level projects. Yeah, we don't do Deepin only, even though I'm really excited about Deepin, but we also do DeFi and consumer, and yeah, excited to be here and speak.
Thank you, everybody. Let's start with our first question, which everybody's happy to answer. I'll direct it first at you because I know you have been running and working with Deepin projects for a really long time. By the way, Deepin, for anybody who's not familiar, decentralized physical infrastructure is what it stands for. And within the Deepin space, there is a big network of different stakeholders that all need to be incentivized, that all need to be kept in the loop of what is happening. And that's actually quite difficult to build, in my opinion. So the question is, how do you create network effects, tokenomics, utility within a Deepin project that actually makes that project long-term sustainable and not just a quick hype and then all the incentives kind of fall to pieces along the way?
So, happy to give. So there are a few projects which have executed their tokenomics like in a very good way, and we were very fortunate to work closely with them. So happy to share some of the pointers, and kind of then we can build on that. I think just to call out a few, like the key one which I think we are very bullish about is GeoNet. So they basically allow you to improve accuracy of geo tracking from like a meter level to like a centimeter, millimeter level, which is then used in precision agriculture, drone farming, you know, all those use cases. So, like some key things in creating network effects, I think what is very interesting for a lot of deepen projects is the price of the token has absolutely no relation with fundamentally how the project is doing. It's purely speculative. So I think one of the key things for that network effect is how do you maybe integrate buyback and use the revenue generated from the project to then go and buy tokens in the open market, so that there is a link created between how fundamentally the project is doing and how the token is performing. Buyback and burn, or even a better strategy we have used is buyback and create liquidity pools. So these are more on the capital market side. The other things we have seen is for deepen projects, it becomes very critical to have a very good coverage. Like in this case for GeoNet, it's about what areas of Earth are covered, you know, and how dense that coverage is. That improves the accuracy. So the idea is, how do you use some of these token buybacks to then go and incentivize by giving like bonus tokens to people who help get coverage in remote areas or increase coverage in non-dense areas. So that's more on the practical side. And the third is, so capital markets, practical, and the third is community. You know, how do you get community, how do you give community rewards for actively contributing? So people who actually have this antennas, GeoNet antennas, we call them RTK networks, so they are actively contributing. How do you incentivize them to keep doing that? You know, how do you incentivize them maybe via a staking program to go and stake the tokens? So it again reduces the sell pressure as well, and the community gets to take a part of the growth of the project.
Thank you. I think that was very comprehensive. Is there anything you guys would like to add?
I think the question you asked earlier is, how do you differentiate between hype and utility? And I think that's something which is an industry-wide issue we all are facing, regardless whether it's Deepin, whether it's DeFi, whether it's any industry. I think everyone's trying to find a good balance of providing utility in terms of your token and your product or your service, while at the same time finding a way to maintain hype as well. Because historically, we've seen that they've just been too much hype. And the model of hype is usually always centered around rewards. And as long as you're paying out the incentives, as long as you're paying out the rewards, it's all good. And the moment that dries down or your token does not do the same price action, everyone just takes a step back. So we're still in very early. I don't think we've figured it out yet, but we're trying to find ways in which we can create value to where you would want to retain your token rather than sell it. And the true value of your token remains when it's in your wallet versus if it's on a decentralized exchange sold somewhere. So I think that bridge is being gapped slowly. But the first and foremost thing that we have to get out of the habit is to constantly put so much focus on incentive and rewards and find other mechanisms to hold and retain power and give it back to the users as well.
Yeah, so I'd like to answer this by actually treating supply and demand question and treating them as separate things. So first, to answer on the supply side, a sustainable model would be something that subsidizes supply initially to solve your cold start problem, and eventually moves from an emission-based model of rewards to a cash flow-based ROI for participants. Supply needs to be there before demand can come, and you can take care of demand. On the demand side, I think the issue with everything in crypto, most cryptos and Deepin specifically, has been on the demand side. I don't think you can incentivize and create demand. And the problem has been a lot of early Deepin projects, which have been the headline Deepin projects like Helium, which carries the industry, have basically created supplies for things where there's zero demand. And I'm very interested about Deepin projects which are creating supply for existing demand there, right? So we invest in something called DCharge, which is building an EV charging network, right, across Asia and America. And I don't think there is something that the team needs to create demand for EV charging, right? So there's a demand. Can we get the supply out very fast? Can we create a network of participants? Can we create sustainable economics in there? So I think if you have demand, there is there is revenues on this cash flow that the network generates, and that is then can be paid out. So the model has to be that a deepen project has to create something that has demand. Demand creates cash flow, which is then, that's how you incentivize your long-term participants in the network as such.
Yeah, thank you. I think that's a very, very good point. One of the big questions, when we see deepen projects is often, so who's actually going to use this? You're supplying this, but who is on the other side of that fence? And the question is actually not always straightforward. And sadly, we often see phenomenally technically strong projects just not building a product that has demand. So it's something to really think about. On the same similar wave, I want to see if there is demand, right? So we say the project is ready to go, has a demand like the EV charging example. Sebastian, how would you say a project in the deepen space should go to market? What are the mechanisms?
Yeah, I think we are super early in deepen. Deepen is going to be humongous, and I think we all share that view, and that's why we're excited about it. But we're really, really early. We're dwarfed by the size of DeFi and the success there. So, and I think we need to first keep in mind, okay, so why is that so? Well, DeFi became big, at least on a very high level to me, because you were crypto developers selling to other crypto native users. And it was very simple to adopt and do. Now in deepen, and I think when we look at a community-owned shared infrastructure, you're often touching infrastructure, an existing infrastructure or new infrastructure. So on a high level, towards your question of go-to-market, we kind of see two, at least at our firm, two go-to-market strategies. Either people go into a legacy infrastructure that's so very light, like keep it very, very simple. So you go into existing markets where there's, guess what, smartphones, and on smartphones you can deploy apps. And these sometimes feel a little bit, okay, why am I using that? But at least you have a distribution channel and an easy to manage infrastructure to go to market. And I would bucket people like Nodl in there, Silencio on peak, and getting to traction of a couple of 100,000 users easily. The other part where you're actually trying to go into the route of what you mentioned with these autonomous vehicles, building infrastructure around them, helping them charging and doing that automatically. I think that's all the very vivid fantasy that we have, 5+ years or whenever that's happening. And it's going to happen for sure, but it's very capital intensive. You're touching very complex infrastructure that sometimes isn't even there yet. So for those particular projects, we sometimes see that they go into these new markets, emerging markets, where there's no legacy, and even in some extents where there's public sector backing that's pretty massive. And here in this region is probably standing out with a couple of really good examples. I'm mentioning Peak, and you guys are invested as well. So, doing stuff here in the UAE, with Vara here in Dubai and so forth.
Anybody else wanted to add any points about, I know you're an expert in go-to-market, or your company. Do you have any other thoughts on GTM for deepen projects?
I think go-to-markets are not very different in this space as much. I think we're super similar, whether it's tokenization, whether it's deepen, whether it's DeFi. Yes, we do have our fundamental differences in the value we provide. But I think at the end of the day, go-to-market, you must have a very strong aspect of distribution before anything else. And that's distribution that reaches your community, that's distribution that reaches your clientele. And that distribution needs to be wrapped very strongly in your narrative. And I think narrative building is super, super important. And with deepen in particular, it needs to be very strong, like a very strong enterprise use case, more so than anything else that you're working with. And if you're able to combine that with the right narrative, with the right distribution, with the right partners, you can have better chances of success. Nothing is guaranteed. But over and above all, I just think, man, we need to start building something that is, you don't need to sell the value to someone. Like in our space, we're all the time just convincing people and saying, you can do this, you can do that. But if something's valuable, it's very clear. I don't need to sell you on it. And on its own, it does its own work. So I think the next step should be of just bridging that gap between real-world utility through Web3 distribution mechanisms. And I think that we'll need to do less talking, and the product will speak for itself.
Maybe on the similar note, but with regards to adoption, I think we all know DeFi, decentralized finance. We all know that that has been a topic that has been dominating or has been brought up at conferences and at narratives over the many years within the build-up of crypto or the blockchain space. But DePIN is a rather new topic. In terms of adoption, how is this fundamentally different to DeFi? Does it need a different thought process? Is it different people involved? Any thoughts? It's a little bit similar to go-to-market, but along the lines of like, how do we need to think about the adoption of DePIN going forward?
I think, so we were very fortunate actually. We were investing in DePIN before even like the term was coined. So we were active in the space since 2018, 2019, back with Helium, and what happened is like everything in crypto has like like a wave when they are the hottest kind of thing in town. So then I think last year, couple of years back, DePIN became the hottest commodity. I think what is very interesting about DePIN is it has a very strong kind of Web 2 side as well, which has to work to really make the Web 3 side work. So for example, if it's a specific hardware, so there are two types at a high level. One where the company has specific hardware. So like GeoDNet, it has specific antennas. Hivemapper has like street mapping kind of tool which you have to offload, or commodity DePINs where you can just use your smartphones. So whenever there is specific hardware, there is a whole supply chain element which has to be taken care of. Okay, what's going to be the BOM? What's going to be the unit economics behind the supply chain? And and that is something which attracts entrepreneurs which are very fundamentally driven. So what we are seeing is sometimes one of the things maybe in a go-to-market thing is with some of the companies, those fundamentally driven Web 2.5 entrepreneurs who address that, they should also be crypto savvy and know how, because again crypto is like a different community. They like memes, they like how things work, and so they have to attract and understand the community and make sure that the token performs. Like we have seen a lot of very fundamentally strong DePIN projects where the value actually is not reflected in the price at which the token is trading, right? So how do you handle that? How do you get a very strong community manager who manages the community? How do you get agreements with market makers, exchanges, DEXs, and the whole like capital markets play in Web3? So I think that is a critical element which we have seen. And the other thing in general is I think like for Helium, for example, the forward-looking growth of subscribers, how the revenue, how that will bring revenue for Helium, the P multiple with which kind of the Helium token will trade. I think that so I think for us, like what really excites us is how fundamentally driven it is. And I think for a long time, it's like totally opposite of meme coins, where there is no fundamentals, where it has strong fundamentals, I think, yeah.
Shaishav, any specific thoughts on the adoption aspect?
Yeah, I think the user profile of DeFi users or DePIN users is actually very different, both on the supply and the demand side again. Basically, I always say that DePIN project is like a normal infra-heavy project. You have to do sales, you have to do BD. Things are not smart contract. You cannot launch something and people go and use it. So there's a whole sales cycle and demand cycle and everything that you need to do, right? In terms of user profile for something that is very distributive and consumer-oriented kind of DePIN project like Hivemapper, you actually have a user profile which are very retail users as such, right? But not crypto necessarily, right? So actually DePIN is very decoupled from crypto as an industry and segment, right? And that's the positive and negative, right? Positive is when there's a bear market, there's this segment which actually derives this cash flow from outside crypto, right? It's actually real world. Like if you have a charger, that's a real charger there that's really charging and having unit economics as such, right? On the demand side, again, it's a very different profile. So anyone can use the maps. When you use a Google map, it's not a crypto, or it does not matter if you're crypto or not crypto, right? And same thing for charging. So I think the community and the Deepin has a much wider kind of appeal and wiser group that you're looking for. A lot of Deepin projects which are infra heavy actually have most of the operators are actually these large operators who treat it as a yield thing. So if I can generate 12%, I'm happy to deploy 10 million, put 10,000 units, get 10% on my return, and I'm happy, right? So it's a very traditional business as such, right? It's the token, like Deepin is the only thing where crypto adds to Deepin, and why we call it Deepin is it's firstly decentralizes the capex, right? So projects are capex heavy, and if you can decentralize and source capex from multiple users, you could expand faster. And on the demand side, it's permissionless in a sense, so everyone can join the network. It's open participation. It basically, you create these companies with open ownership as such. But otherwise, I treat Deepin as like, when I talk to founders, I'm like, you are running a very traditional business, right?
Yeah, I think, so I agree with what the others said so far. I think one thing that perhaps stands out versus DeFi, and you mentioned enterprises being very important, which I fully agree, is that, projects, they, ship a first product, create a beachhead, but what feels versus DeFi, where you just throw it over the fence and somebody's going to pick it up, and play around with it, and then it's going to spread on crypto Twitter and la la la, and then all that flywheel hopefully starts. That's not going to happen here. So in the end, you need, and projects that we've invested in or are seeing and that are at a certain stage once they've created that beachhead, they do require salespeople and BD people, and then mimicking what you said, their business is like any centralized startup in that moment, and they need to go out to customers. And I think one thing that I really admire from Helium is, starting with with unregulated technology, Wi-Fi, which is open, and then at some point subsequently going into the 5G, into the regulated world, and then hitting the road with BD people going, up to Bellevue, where T-Mobile US is, and other places. Yeah, so that's very different than DeFi, I feel.
Just to quickly piggyback off what the others said, I think the profile of Deepin it is very true. It is much more a conventional Web2 business profile. People that relate to it more, because at the end of the day, you're using existing infrastructure that people have already used to, and just putting a decentralized wrapper on it, putting an incentive wrapper on it, and allowing everyone to have a stake in the system. And I think that if you take out the Web3 side of it, on the grassroots of it, that's just a very good business model, right? It just allows people to have ownership, and if I am spending so much time on the internet, and if I'm spending so much time on the Wi-Fi, it would actually make sense that I get to participate when it comes to making decisions on the future of that network. So Deepin, tokenization, whatever your word is, I think eventually the next big breakthrough that comes into the space in which people start recognizing blockchain and Web3 beyond just cryptocurrency is going to come from some sort of enablement in infrastructure and brought to the real world.
We have just over 5 minutes. I do have quite a few more questions for the panelists, but I would actually also like to give the audience an opportunity to ask any questions. I'm thinking maybe to take one or two if there are any questions in the audience. Yes? I think you might have to scream. Yeah? I will repeat your question for everybody. Sorry, I feel like
Testing. Okay, sir. Loud and who are you?
Yeah, my question is that I've been in crypto since last 7-8 years, and what I see or I understand that it was created for the common man, and all those financial institutions who were heavily criticizing the cryptos and ridiculing it, they're all jumping into with the crypto market with the ETFs and all that. So this is my personal opinion. I want to have a better understanding. Do you think now the main crypto in the top 10 or top 20 are now in the hands of the institutions, and they control the market, unlike few years back when the retail did have a bigger say. I want your input on this.
I'll just answer quickly in my way. Power always has a way of finding its way back on top, right? General, pan-India industries. So at one point of time, it was much more retail, like you said, but institutions coming in is actually a good thing. It's not so much, they come with liquidity, they come with their own access, and they come with their own stamp of validation, right? So other people start looking at it in a different aspect as well. But wherever money is to be made, everyone's going to come to take their bit. So it's a very liquid market. BTC's done really well. So everyone wants a piece of that, and everyone's trying to find a way of making it accessible. But I think that one shouldn't look at it from the lens of it belongs to the people versus it belongs to the institution. It's there for everyone. If you have the palate for it, if you have the risk for it, take your plunge, and if it works out for you, great. But I feel like institutions coming into it, I personally think like that's a very good move, and it was inevitable.
Yeah. Just maybe one thing to add to what CJ said is I think there is a difference between centralization and institutionalization. So I think as long as the Bitcoin, as long as all the protocols now we can do a debate on how decentralized actually Bitcoin is. There are whales who are holding a lot of tokens and everything. But as long as the core premise of decentralization, immutability is there, institutions coming in, that adds to positivity, that adds to liquidity, because at the end of the day, institutions, pension funds, these big asset managers, they are holding retail users' money, but they are handling it in a way and they are getting exposure to this. At the end of the day, if you trace the money down, it will still come back to retailers who are investing via them. So I think the short answer is that as long as institutions coming in doesn't cut to the core of decentralization, immutability, those core things with which Web3 was started, I think that is a good thing. But yes, then the question becomes how decentralized it is truly. How many validators are there, and all those things.
Thank you very much for your question, and I think we'll finish actually with a question that I'm going to pose you, which is on a similar note. Is what do you think specifically for the Deepin projects, right? Because all of you touched upon the fact that there is a very real-world asset relationship here with the blockchain, more decentralized space. So my question, a little bit aligned with the sir's question, is how much decentralization versus centralization do you think is the right combination or balance for Deepin projects? Do they need to be fully decentralized, or are they actually institutional-driven projects that essentially create, like was mentioned, the CapEx portion just into smaller chunks and more owners that can then potentially earn yield on the value creation of the network? What do you guys think? What's your experience?
I'll start, I guess. You want a quick answer, right? So I'm watching the seconds.
We have 30 seconds.
So there's no black and white, but if I were to choose, start in a centralized way and gradually, show a path towards everybody who's working with you, how you'll decentralize at the end, but don't overburden it with, putting yourself on a path that you can't change and adjust.
I'd like to first start with acknowledging at least the problem that the guy raised, right? And I think it's a fair question. It's something that is being heavily debated within the crypto communities, right? The crypto and blockchain was created as a way out of the current financial rails as such, right? And if there's institutional capture, and then it just is another tech, there's no difference between Swift and crypto, right? Like that's not the intention. So there's a balance somewhere, right? Institutions do there's a positive route, they bring validation, they bring obviously institutional money. But also I thought Amit answered it in the right way, that it's a balance of till we are decentralized and till we are making sure. So, and it's also true, I would say that you should treat top 20 as different. It's every project has a different thing. So Bitcoin, you can hold 50% of Bitcoin, you still cannot make changes to Bitcoin. Bitcoin is very decentralized in that sense, the community has still very philosophically strong cyberpunk ethos. I think that's the last cyberpunk strong community as such, right? And for Deepin to create something, I think it's basically used, for Deepin, it's basically founder-led enterprise model. So you have to start centralized and then open up, as he said, yeah.
Thank you very much. We will be asked to leave the stage, and it's a shame because I would have loved to speak to you longer. Thank you, everyone.
Mona the star. Amazing. Folks, let's take a photo. In front of the tables. All together, don't be shy. I was giving the Keanu Reeves hug. You know when you put your arm around but you don't actually touch? It's lawsuit proof. I see what you're doing. It's the air hug. I also call it the divorce stance. Every photograph is like this. He's doing this. He's putting the Holy Spirit between his arm and earth. Okay. I respect your propriety, sir. Okay. My wife taught me that technique. In my events, I can't quite make contact. Yeah. Or I have to do the Andrew Tate stance. You know, but yeah. Well, now I am because I've been tongue lashed enough times. Okay, anyways, enough about my personal life. What do we got going on here? Okay, so our last panel of the day, but not our last program item. Okay, that's very important to say. And I'll be explaining what happens after this panel. So let's have this, great topic. Tokenizing the future, real world assets on the blockchain. And the moderator is my other favorite attorney in Dubai. I don't see her, but I'm sure she's in the room somewhere. Arena Heber, are you here, Arena? Arena Heber? Hadi Shaim, and no Hadi. Arena Heber. Okay, Lesia Baumgarten. Okay, we got that, fantastic. Anton Golub. Anton, I know I saw him outside. Yeah, and Arena. Arena, thanks for coming. We are happy to have you here. How are you? So, ladies and gentlemen, Arena's in the room. Arena, you're going the wrong direction. Whatever you say there. Hi, how are you? Nice to meet you. You wouldn't know it, but we know each other. Okay. Arena. Please take a seat. Thank you. So, my good friend, awesome crypto attorney, boss of Neos Legal, will be moderating. Boss / managing partner, girl boss. Our panelists are Alessia Baumgarten. Welcome again. Anton, you're here. Amazing. Okay, did I mention Alessia is VP Ecosystems, DWF Labs. Anton, good friend, founding member of RWA Labs. And Robert Farquhar, who thinks I can't say his name, CCO Control Alt. Did I say your last name correctly? Oh my gosh. Big round of applause. Lots of love. Irina, all yours.
Thank you very much. Thank you very much for being here. Thank you very much for our wonderful panelists. So who was here in 2018, 2019 when we said everything will be tokenized and everything will be traded on chain? Who was around on those days? A few people in the back. So we were not wrong, right? We're just super early. We were just so early. The infrastructure wasn't ready. The regulations were not ready. There were no secondary exchanges. There was absolutely nothing available for that vision to come true. Now we take you to 2025 UAE, Dubai, and the Dubai's regulator has passed the new rule book that allows for tokenization to take place and facilitates listing on exchanges and facilitates secondary trading. So everything will be tokenized and traded on chain. That's the whole country is here to make sure of that. I want to introduce my great panel. If you want to spend half a second introducing yourself, is that okay, Alicia?
Hello? Yes, it works. Thank you so much for having me. It's an honor to be here, especially having Irina as our moderator. My name is Alessia Baumgartner. I'm VP Ecosystems at DWF Labs. We are a Web3 market maker and investment firm, and we also incubated Falcon Finance, which is a yield-bearing stablecoin with 2 billion in TVL right now. Thank you so much.
Awesome. I'll take that.
RWA boss Anton Golub. Who doesn't follow Anton on LinkedIn?
I'm Anton Golub, and I'm, I think a crypto enthusiast, let's say it like that, passionate about digital assets. Founding member of the prestigious RWA Labs here with Irina, where we're trying to, or enabling companies to come here to the UAE, to the best jurisdiction for digital assets in the world, and hopefully issue some RWAs and distribute them and sell them to people, basically.
Robert, the man who made this happen in Dubai.
I feel like I get a far better reputation than I deserve here. So I'm Robert, I'm Chief Commercial Officer of Control Alt. We tokenize real-world assets. A lot of what we do is here in the Middle East. We also work in UK, Europe, basically running native tokenization, building the rails for governments, and then facilitating that marketplace to move forwards after.
So who has not heard of a property tokenization pilots happening in Dubai? Who's been living under a rock lately? You have not heard? No, I've heard. Oh, you have heard. Okay, so everybody has heard about it. So Control Alt is the company who actually made this happen. So we will be hearing directly from the horse's mouth and not the speculations which are flowing out of there in the market. Anton, if we can start with you, please. What is the real-world picture for the real-world asset tokenization? Will everything be tokenized, or some assets should not be tokenized? What is the best asset to start when we're talking about tokenization?
So Irina, I think you actually started the answer of this question when you said that in 2018, all of these reports from McKinsey and so on said that trillions of dollars will be tokenized in a few years and put on the blockchain and then traded and sold on the blockchain. So now we are 7 years later, and the same reports again say trillions of dollars will be tokenized, put on the blockchain and traded and sold, right? So the question is what happened that the statements are the same, but the gap is of 7 years, right? And now if you take a closer look, even though one day everything will be on the blockchain, I think I'm really convinced of that, like personally. If you take a closer look, you see that it's actually just a couple of $1 billion, that's tokenized and placed on the blockchain and then traded there. And I think the numbers are now, I have to put a disclaimer around the numbers. It really depends like what are you actually looking at when you say tokenization. And then on one side you have on-chain tokenization in the sense that the asset really is on the blockchain. That could be Ethereum, Solana, Polygon, or something else. And then you have things that are tokenized, but they're somehow far away from us. Maybe they're in some ledger that's controlled by a bank, or they're on a private ledger. And then there are different numbers. But the numbers that's being floating around is that actually you have around 18 billion, if I'm not mistaken, the last number, that's actually tokenized and it's on the blockchain. Like hypothetically, you can connect your wallet, right? And you can go there and buy those tokens, and then you can get access to RWAs. You would think that illiquid assets are the ones who are tokenized, put on the blockchain and sold. That is not the case. The most liquid asset on the planet, which is US Treasury bonds, those are tokenized. Those are placed on the blockchain and they're traded. There's amazing success stories like the one that Robert is a part of with tokenization of real estate. I think later you can say how the scale is. You have a bit of tokenized gold by Paxos and a few other players. And then you have a couple of small use cases around private credit predominantly, right? And yeah, I mean, I think that actually kind of explains it, right? The big dream of tokenization, illiquid assets become liquid because we tokenize them. That's not really happening. And maybe for me to wrap up the question, like why is it that you have tokenized US bonds actually as the biggest part of tokenization, that's because that's where the demand is coming from. the demand in the market is for such instruments. That's why they're tokenized. And if you're asking me why isn't there tokenized luxury watches, I don't know if this is luxury, but or luxury cars, is because there's no demand in the crypto industry for such products. Maybe I can then pause and...
And I guess this takes us to you, Alicia. So if it is, what excites the capital right now? What is the view from the investor side? Because it's all great to tokenize a horse or a watch, but if there's no capital flowing into that, what's the purpose of doing this? What are you mostly excited? Which asset class or use case?
Yeah, I completely agree with Anton. We've received many decks over the last years of we will tokenize cars, luxury watches, anyway, all these assets that, as you said, there is no actual demand for it. But no, from the investor side of course, we are always looking into things that could give an upside in the future. And what's the best part about tokenization is that it can give access to the people for assets that they wouldn't have access otherwise, because you're not a institutional investor, or you're in a region that you wouldn't be able to access those assets. So one interesting thing that I've seen recently was, for example, the tokenization of US stocks being available on Telegram wallet. So anywhere in the world you can buy US stock assets within, of course, it doesn't have to be on US times, so it's available 5 days a week. And this is a great opportunity for retail in general, because everyone here has Telegram or knows someone that uses Telegram, and you can just buy stocks at a fraction of the price, of course, and hold it there. So I think those are one of the great use cases and aligns completely with what crypto is supposed to do, which is give access to the people, be transparent, and tradable almost 24/7. This case not, but almost.
Robert, your fellow panelists talk big numbers, 1 trillion there and 1 billion there, but you actually implemented tokenization in Dubai. You actually integrated with the Dubai Land Department and brought the tokenized properties to market. Can you describe the practical aspects of this project, how that actually happened?
Yeah, of course. So over a long period and a lot of pain.
Which sums up our industry.
Optimistic.
It's ultimately, we all know there's a quick way to do things and there's the right way to do things. And in the Web3 industry, the quick way to do things is how it has been done throughout time. It's always a guy buys a house, issues some NFTs out of it, people buy it, there's no legal right, they've not bought anything, they get scammed. We see far too much of this in our industry. And I think that's more when we start looking at, and some of the other panelists were talking about it earlier, a lot of the people that are in this industry are crypto natives, they're Web3, they're DeFi individuals, and they're just making the most of what they can make. Now we're seeing more TradFi move into this world, and what that's doing is building proper rails for how things can be done in a sustainable, secure manner. So that's ultimately why we started working with DLD and building this project out. It was to make a token which was directly linked to Land Registry, so that when you buy that token, your name is changing at Land Registry. So there's a very direct ownership of that token. You're bringing all the efficiency, the operational and the cost efficiency of the Web3 world into the Web2 world, where you're keeping that security and that safety. And that's, I think, how you bring those investors in and how you get that distribution. It's a lot of teamwork that goes into any project like this. We have about a dozen different countries that we're working with at the moment to implement similar structures, because ultimately once that blueprint has been made, and as I mentioned, this was the first place in the world to do that, every other country wants to do something similar. And once you start building up that wider ecosystem, then you start seeing pure tradability around it. Because to Anton's point, why do we trade liquid assets on chain? It's because they can be traded. It's because the problem is we're trying to match supply and demand at the same time. Unless there's enough demand, people will not put those hard-to-sell assets on chain because they just will not sell. So if you bring highly liquid assets on chain, and let's be clear, like most of the TVL that we have at the moment are just Web2 structures placed on chain. It's not a native Web3 structure. So we're just trying to build up that demand so that that supply can then come in, and then you can tap both sides of it and you double up yield on chain and off chain.
So while we have you here, can you talk us through the actual step-by-step, Robert? So we have an asset, be it a property, let's say. I think it's a great use case. Who wants to hear about the properties? Everybody? So from an asset to a token in an investor's hand, you know, talk us through high level.
Of course, I feel like this is
Remove all the
basically,
pain and suffering,
yeah.
just give us the gist.
Yeah, I'm not sure if this is an IP steal or not here, Irina, but I'll run through it. So basically how it works is we are integrated into the government. Now, everybody that wants to do any form of fractional can be integrated into us as well, which means as they're moving through that platform, through a regulated platform as a broker-dealer, it just triggers APIs into us. We then gather the right information. We send that into government. We know exactly how they want it. We have those APIs, which means you are now paying into a client monies account at the start. As soon as you pay into that client monies account, there's triggers that go through. Your name gets checked. The property gets checked. The valuation it's being sold at gets checked. You are then issued two tokens. The first token is a title deed token. So this is just from DLD, and this is the ownership of that property, and that is fractionalized. You get a copy of that title deed in Dubai Rest. You can go to the government and you can see it. Your name is very clearly there with the percentage ownership that you own. And then you get a second token, which is an AVA, which is a new token that VARA had brought out fairly recently. So we were the first issuer in Dubai. I never mentioned that. I really should more. That AVA is your economic and your operational rights to that property, because ultimately there's an underlying company that's managing it for you, so you can see that yield. You now get that AVA. Now, the benefit of the split out between those two tokens is the ownership token is a government token. The AVA is a distributor token, so we issue it, but we don't always have to. When you have that AVA that is categorically linked to that ownership token, it has value of that AVA, which means now you can leverage it. So that's when you now take that traditional Web2 structure and you merge fully into the DeFi space. So you can start borrowing against that AVA that has direct linkage to that title deed token on chain, immutable, transparent. You can now borrow, you now bring mortgages on chain. You now, if you want to use something like Aave, and you take that ownership token, or the AVA, and you place that in, you now start doing lending looping on that. You're borrowing against an asset which is yield generative off chain. So it's a simple arbitrage play of how much do you get as yield from that? How much can you borrow USDC against that? If X is bigger than Y, then proceed. You're now borrowing USDC and then investing that back in. So you're doubling up the yield that you can get off of any asset that you're investing in.
That's, and that's what I love about this. It's a direct tokenization, not through the SPVs. Remember, you would set up an SPV, you tokenize a share, and then the actual asset got double spent, and the guy ran away to Caymans, enjoying his life there still. So, Anton, Robert described a very complicated path, right? What Robert did not mention, custodians. What Robert did not mention, the infrastructure layer, the exchanges, the regulations. So there's so many more moving pieces that Robert did not mention in the interest of time, but you know the path from the asset to a token in an investor's hand. You've done this. So where does this break down, or where do we see the weakest points in the whole stack?
Yeah, so I think all of us actually hinted at the reason why RWAs have not scaled so far is because the issues are multidimensional, or the problem is a multidimensional one. So you touched upon the first one, which is infrastructure. So the way tokenization has been done so far, and actually most of the tokenized assets are placed on the blockchain in the sense that you actually tokenize a fund. So you have this special purpose vehicle you touched upon, and then you tokenize the share units of that fund And that's actually the token that you buy when you're buying tokenized US treasuries, right? Now, you don't have to be an RWA expert to realize that you actually increased costs, you increased friction by wrapping the asset with this sophisticated vehicle, right? So I think this was the first of the problems. The second one that we touched upon was actually demand. Who will actually buy these tokens in the end? I think there was a lot of soul searching, a lot of discovery, what people want. Robert, you gave a great example. The hottest real estate market on the planet, which is here in Dubai, if you tokenize in the right way such property, obviously there will be buyers for that, right? And the third one, but not the least important one, is actually regulation, right? The legal framework. So we are lucky to be in the best jurisdiction on the planet when it comes to the organization. So it's here, UAE and Dubai in particular. And the reason why on many occasions you could not sell those tokens or you cannot place them on the blockchain because literally there was no regulatory framework to allow you to do that. So this direct tokenization that you mentioned was initially possible in Switzerland, like as one of the first jurisdictions, then Liechtenstein. I think UAE came up there very quickly, and now you have a couple of more jurisdictions on the planet that give you direct issuance of the, so the token that's issued there represents the ownership. So I think that's kind of like where the constraints were so far. I think that we are really lucky to be here in the region where we are less constrained, right? And I think the results, like the amazing one that Robert has mentioned, show that we are progressing very well here.
Yeah, if anybody wants to know how the Dubai's regulator is treating RWA tokens, Anton has contributed to a Forbes guide how to tokenize things in the UAE. You can just Google it, it's available for everybody. Alicia, I can imagine you receive a lot of pitch decks from the infrastructure founders, and I can only imagine the titles. We're here to tokenize the gold. We're here to tokenize the world. Do you think the founders really understand the complexity? Do you think they understand the jurisdictional complexity? Or do you think they're still, living in a dreamland where they can deploy a platform and every gold token will be trading on their platform?
I mean, I saw a pitch deck yesterday, literally, that was completely out of touch and for sure not compliant. So, no, I mean, look, in crypto, we are all used to seeing founders getting a bit lost and just trying to see what would be the next hype or the next wave and try to surf on it, even though they might not have any experience or understanding of how the specific tokenization works, right? I mean, we have received many decks, as I've told before, and I always look into what is the team's background, if they have any knowledge or if they participated in any tokenization projects in the past, and a lot of the times, no. I mean, I think the three main points whenever looking into those decks or any sort of tokenization-related project is if it's freely transferable, if it's compliant and regulated, and if it's secured backing. So if none of these points are touched, I already think it's not right. But of course, whenever they have reached those 3 points, then it comes back to the competition of, how would you do your go-to-market, if it will work or not. And then, of course, we have already players in the market that have a track record and are, in partnerships with governments. So, of course, they have a much further head start than those early-stage startups. So, yeah, we have received many decks, but I don't think most of them went through with their project.
Yeah, and that's what we see as well. We receive 5 to 10 tokenization hopefuls a day, and some should definitely not be doing this because the knowledge is definitely not there yet. Or the knowledge that they're relying on is from 2018. Robert, talking about the knowledge and the will, what made it possible for the direct title tokenization to take place in Dubai? Because a lot of jurisdictions tried and all of them have not succeeded. So what made this possible here?
I think it's a mentality and it's a desire shift. And it's the desire to do something for the right reasons rather than to just make money immediately. I think the companies that do well in this space are ones that build sustainable, scalable solutions, the ones that just want to get an enormous amount of assets on chain, pull in some of those TVL incentives, and then exit. It's very clear who they are. And I think whenever you're speaking to someone and their approach is just, I want to tokenize 50 billion in the next month, you know that they're just going to take shortcuts. Whenever you work with governments, and I think the benefit that we have at Control Alt is all of our senior team come from a banking background where we made products for financial institutions, we worked with governments. So what we're doing is we're just doing that again now, but with all of the benefits of the Web3 space to come along with it. So it's understanding at the core, what is the problem that you are trying to solve? I mean, all of us here would have people pitch to us all the time and say, hey, I've got this solution. And they go through it for 5 minutes and you go, what is the problem? Because you're coming up with an idea that doesn't need solving. There's no issue here. I think good products are always one where there is a problem at the core of it and you are trying to solve that problem. You get buy-in from key people, and then it's just a case of, okay, carry on doing things the right way, not what benefits me and not what benefits Control Alt. Our ethos the whole way through this project is what benefits Dubai? How does this help investors? How does implementing this solution create a better ecosystem? And that's why we don't do distribution. We're not B2C. We're just Rails, because we want other counterparties to use this system.
And that's what I love about Dubai, and it got confirmed by the CEO of Vara that RWA tokenization is the priority for Dubai, it's priority for Vara as the regulator, and they're happy to look at all the use cases which will promote that growth, promote the investor access, and to grow our FDI into Dubai. We will move into the fire round now. You have less than 10 seconds to answer my next question, and I want the audience to participate as well. Let's make it as lively as possible. Alessia, RWA tokenization in one word.
Oh, wow. Liquidity.
Wow, you took my, you're a market maker as well. So yeah, I go with liquidity.
The future.
RWA tokenization in one word. Transparency. Anybody else? Anybody wants to play with us? No? Okay, next one. Fractionalization, very good. Get prepared for the next question. Most overhyped asset to tokenize now?
Art pieces. Which one? Art pieces. I'm not a fan.
Okay. Diamonds.
Gold.
Gold. Anybody? What's the most overhyped asset to tokenize now? Property. I think it's underhyped. Ooh, we don't approve. Anything else? No, nobody wants to play. All right, next one. What is the most underrated use case and you want to see more of that?
Using tokenized assets as collateral for yield.
Very good. Yield is,
Sorry, that was not a one word, but...
That's fine. Few words is okay. Yield is the most beautiful thing that you can get, Every month something coming into your pocket. I love yield. Anton?
Tokenizing private data. So I think the blur with what's yours, what's AI generated, what's generated by someone else will be, unclear very soon. So if we can add value to people who train those AI models, I think there will be a lot of value.
Anybody's working on that? Because there's 600 fake arena heavers on Twitter asking people for money. I would love to get some money or some yield out of that. Robert, most underrated asset?
So underrated, so use case of those assets, I think it's leverage. I'm going to copy an answer here, but 100% like how we use assets, it has to be collateral.
What do you want guys to see tokenized? Communities.
Equities.
Equities. Well, that's security token in the UAE. That falls under different regime.
Intellectual property.
Intellectual property. IP. I love that. IP. You wanted to answer that?
I love that answer, and I was going to add to that, if we can sort of streamline the licensing process globally.
Licensing of?
Intellectual property. I think that's...
So Madrid protocol is not enough for you. You want more?
I want more. I always want more.
Fantastic.
Oh, wait, now wasn't you I gave the money to online, on Twitter?
Sorry?
Wasn't you I gave the money to?
Oh, yeah. You received 20 Bitcoin back, inshallah, as we say in Switzerland. So what is Next question. What is the best country and the best jurisdiction you are most excited about? I know it's a tricky question. Where you're mostly excited about when it comes to RWA tokenization?
UAE, of course.
UAE.
UAE.
Anybody has another answer? Anybody wants to be deported? No? Okay, good. So tokenization failed in 2018, right? So if the tokenization fails again now, it's because...
I would say because of regulation, but I don't think it would happen.
I agree with Alessia. Failure is not an option, so I don't think it will fail now.
Love it.
I like the answer.
Failure is not the option.
I'm going to say bad actors.
Anybody? Well, it has in Dubai, in the UAE.
Right, but it's a global market, right? That's the point.
RWAs get taken out of the securities framework. You're welcome. Next one. Finish the sentence. In 5 years, if you're not tokenized, you are...
Oh, you're not living in this world, that's it.
You're not liquid.
You're not?
Not liquid.
Inefficient. Inefficient.
Don't? Reserved? Oh, you're not deserving to be here. Fantastic. But we are... But we are all deserving to be here, and I'm sure there will be dessert. Thank you so much for participating. Thank you very much for playing. And RWA, maybe in the beginning of the year, I was very skeptical. And being an attorney, being skeptical is one of my strongest skills, right? But now seeing what's happening in the UAE, seeing what's happening in Dubai, seeing how many governments are approaching us for a similar tokenization framework, I'm exceptionally bullish. And thank you very much for being here.
Irina Heaver, fantastic panel. Well done. Let's take a group photo. And dessert for everyone, tokenized or not, because we're still in 2025. Lovely. Oh, yeah. Good job. Well done. Fist bump. Fist bump, well done. You may have the honor. Fist bump. Very good. He skipped the fist bump. It's okay. All right, big round of applause for our, that's the last panel of the day, but we're not done. Big round of applause, come on. And for all of you for being here. Amazing. Okay, so just so we're going over the schedule for the next part, for 15 minutes now, we're gonna do a coffee break and we're gonna have networking, so go caffeinate, go meet your neighbors, go be social. Then from 3:45, that's 15:45 if you're not American, till 5 p.m., you're gonna have the meetings in that room there where investors meet with prospects. And then at 5 o'clock or 1700, I won't be here, but Heidi will be saying goodbye until tomorrow. So go get some caffeine. Fantastic. Oh. And I meant to say Yalla.
We've all got our own ways.